So I've been trading for about 5 years, maybe 8 to 5 years, and I got in the options world because I wasn't making enough just holding long equity. You know, there's not a lot of strategy. It's just sort of like buy it and then pray it goes up. I found tastylive from my friend, and I started looking at the YouTube videos. My favorite part about it was just that there was math, there was probability, it was something you could consistently rely on. Once someone gets the right information, which they provide on tastylive, they can really change their financial situation for the better. Consistently, not, oh, I bought a stock and it went way up one time, but how can you do it consistently, over and over? And with tastylive, I was able to do that.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
SPX cash index hits a new all-time high today before pulling back, but are we starting the next leg of the bull market? It is Wednesday, January 22nd, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan still on this side of the pond in New York. We're here for the next hour as we take you through the close of the futures trading day. If you're joining us on YouTube, come over to the platform, come over to tastylive.com, see what we're all about. If you're already on the platform or on tastylive.com, head over to YouTube. Tell us what you're trading today, what you think of this market action, what you think about the reaction to the news yesterday that we would have the Stargate project. I love the movie Stargate, so very happy about that name. The Stargate project moving forward, $500 billion in AI infrastructure. That's AI infrastructure, so we can no longer rag on Trump for a never-ending infrastructure week. That's already done and dusted. But semiconductors today, they popped to the upside. Tech stocks surging 1.29% higher here as we go above 22,000 in the NQH5 contract. Your S&P is up by 0.6%, 6120. We did have in the SPX cash index, as noted earlier, a top tick to a new all-time high today at 6100.81. So things seem to be happening here in the early days of this Trump administration. Dylan, you last week were given the perspective that you may not like the guy, you may not like the policies that he's putting into place, but effectively, if it's going to be the Wild West, you got to take advantage of it while you can.
And I thought about that since I first articulated that in discussion with you on Friday, and then sort of talked about it more publicly on some of the cable news on Ari Melber's show, and reflected on it a lot this weekend. And I'll go out again later today and talk on Stephanie Rule's show and talk about this. But I really think that you have to look at a number of new people in power. Be sure you can evaluate their risk or benefit to things that you value or yourself, which obviously lots of that happens. but also you can just measure times of change as a basic condition. And this is a unique time of opportunity and change. And I think that it benefits those who engage and those who persist and those who persuade. And though even if you think it's the worst government ever or whatever, the best solution to pollution is dilution. Right. And so even if you think it's a poorly motivated government, it's still a government that's saying they want to be more permissive and they want to risk more resources on more private sector activity. And they're putting their money where their mouth is, maybe at the very, because we'll see, you never know with these people, especially Trump, by announcing a $500 billion White House private sector deal, but in the government, which is a specific thing. And I think that regardless of, we can spend our time evaluating whether Trump or these people are good actors or do a good job, but regardless of whether they're good actors or not, or whether they do a good job or not, I think we all have an opportunity to engage. Like, I know you have ideas about real estate, Chris, and I know that everybody has ideas about things that are medium, big, small, whatever. And I just think when it's a moment of change and a moment of more of a permissive, a risk-taking moment in the culture is always an opportunity. It's also a riskier time. And I understand people feel uncomfortable with the elevated risk. When one is true, the other must be true. Risk and opportunity are equivalent.
You mentioned the risk, and Ilya, before I pass it to you, I think, what people, I know options traders really appreciate this, right? But when you have more volatility in the system, then you got to price the tails to be a more likely outcome. And so the highs could be higher, but also the lows can be lower. The distribution really can go anywhere. And, that's how I kind of feel about things right now. We have an economy on a good track. This is kind of my argument coming out of 2016 to 2017. I thought the Obama economy was pretty good. The stock market was up. The unemployment rate was low. Inflation was under control. From a macro level, those check the boxes. Who cares who's in the White House? And as long as Trump didn't derail that, why wouldn't stocks keep going up in 2017? Ilya, you and I have enough publicly written words over the years that I'm sure someone can go out and cite that and find that to be true for me making that claim. And that's kind of how I feel right now early on. 4% handle on unemployment rate, 2 handle on inflation, an economy that's growing between 2 and 3% in real terms, with a backdrop that may be positive, may be ultimately, more of the same from last year. I don't know. Ilya, though, it's a big gain here today for tech stocks. It's led by semiconductors after this huge announcement that we see here yesterday, 267.17 on SMH. What's your take after the news with Netflix earnings, which was a big beat, plus the semi stuff today? Are you looking at the stock market a little bit differently than you have in recent days?
I don't think there's any arguing with the price action. I mean, you can't. The market is very plainly telling you where its head is at, that it's doing this without really a lot of macro data. Could be more encouraging to sort of extrapolating from this price action follow through, because you say, well, this is the market sort of revealing its tendency without really any sort of episodic risk to worry about. This is sort of the market being given rein to do its default and to find its path of least resistance. I think from a pricing perspective, if I were not already short from the highs that are being tested right here, I would not be a buyer unless those highs were broken just on pure risk reward grounds. We stopped short. And if we were to take out these highs, NASDAQ obviously not at the highs, S&P is, but let's take the S&P as a kind of generalized catch-all that includes tech and this and that, as a kind of barometer of overall equity market sentiment, as we often do. It's at the highs. It didn't break the highs. It stopped at the highs. Is it going to break the highs tomorrow? Very possible. And that, by the way, is notwithstanding the fact that this SoftBank deal was pre-announced weeks before. This is not novel. Maybe some of the numbers are more novel, but this idea was out there in the ether already. The idea that this episodically moved the market as though it was some sort of bombshell seems very suspect to me. More like the market wanted to go higher. It found its reason. Here we go. The market wasn't looking for a catalyst. It was looking for an excuse. And ostensibly, we got one. The question for me here now is, if it breaks the high, I'm going to flip the other way. And if it doesn't break the high, I'm not. But I think if you don't have capital deployed on the short side here, you don't do that. If you don't have capital deployed on the long side, you likewise don't do that. You wait for confirmation so that risk reward is in your favor. And if you do have capital deployed, you don't have much of anything to do. If you're long, you stay long. And if you're short, obviously it depends what your risk management is, but I'm staying short because I'm going to see what this does now. This is decision time, as it were.
Feels like the decision's been made already, Dylan.
Maybe.
I feel like the market is telling you we're good with this. We're good. That the priority is, that the really important issues are secondary, that the easy issues, meaning the things that can be executive ordered, are priority. Rhetorically, we're not on China. We're not on Russia or Israel. Rhetorically, we're on like Greenland and Panama and Canada, which is a total realignment of the sort of just gaze of attention, all of which is relevant insofar as the market continues to believe that basically nothing changes, and to the degree to which something changes, it changes in favor of less barriers to transactions.
XLK today, not quite the closing high in the tech sector ETF. That comes on December 16th at 241.44. We're at 241.39 here today, so it's pretty darn close, right? Banks rotate out a little bit today, which, we're seeing semis take the leadership baton. Generally speaking, it's been semis or tech, discretionary banks that have been leading the way higher here in recent sessions. Discretionary down a little bit as well. Ilya, the bond market today wasn't exactly helpful. I wouldn't call it hurting things, but we had a pretty good 20-year auction. Bid to cover ratio was a bit higher than we had seen previously. Just across the board, even though yields were up compared to previous auctions, the demand was there. Some of the interest rate sensitive stuff actually ends up above water when all is said and done. ITB, the home builder ETF, is able to recover by the end of the day and finishes in positive territory. But I couldn't help but notice that Fed rate cut odds are coming back on the board. The CME FedWatch tool now has 2 cuts priced in for December 2025. Ilya, is that really the most important story for stocks right now? Like, quietly behind the scenes, while we've all been watching, what's been happening in DC on the fiscal side of things, the real story of this market the last week and a half has been that Fed cut odds have gone from effectively nothing to, hey, we're actually going to get 2 this year.
Of course. And that was the perfect tee up, because I very strongly suspect you knew what I was about to say just now. This whole theater with the inauguration and these executive orders is meaningless, because it does not change the narrative one bit. Nothing is occurring here that actually alters the fiscal policy landscape that we did not know based on pronouncements a month ago and 2 months ago. There's nothing here that's happening that you can point and say, this fundamentally changes the trajectory of fiscal policy. All we know, and we have a little pop in the dollar to show for it, maybe if you want to ascribe it to this, is that the tariffs didn't happen by the stroke of the pen on day one. Instead, the authorities were instructed to go think about them. And the comments, obviously, yesterday that we'll see some kind of a tariff by February 1st for Canada, Mexico, and China, which is an interesting mix of countries, two of our closest allies and trading partners, plus our leading adversary. Interesting. But we'll maybe see that, maybe not, who knows. But the only difference in what we've heard has been the timing of that. Everything else, broadly, is exactly as you might expect. And so the real story here has been last week's benign flavored CPI data and the rebuilding in rate cut expectations thereafter, where going into that data, the markets were starting to say, okay, we're down to one cut. If it's any less than this, it's a different Fed. A Fed that opts not to change rates is a very different animal than a Fed that is going from 25 to 50 or 50 to 25 in cuts. That's the kind of thing you can do within a rhetorical sort of bias that the Fed is feeding markets and saying we need to do more, we need to do less. The economic data is impacting this or that. The timeline is shifting. It's moving, whatever. To go from we thought we were cutting to now we're not cutting, that's a really big head change. And the markets basically hit the wall on it going into CPI last week. And CPI told them, back away from the wall. Everything's okay.
Very much like we were last April, May.
Yes.
When the market was pricing in a potential hike, again, only 0.3% chance, but it was still there in the pricing structure. And when the Fed came out and said, no, you don't need to worry about that. We may not cut as much as you want, but like hikes, get out of here. The market said, oh, yeah. Okay, we're all right. It kind of feels like that too at the post-CPI now, where the market says, okay, yeah, we may not get the cuts that we want, but heck, the Fed isn't going to have to turn the car around, which is the most important thing.
Exactly.
It can't be a policy mistake. You got to have two hands on the wheel, eyes on the road. It doesn't matter what's happening. If there's a storm coming, if you have confidence that the driver can get through it, you're just going to buckle up and bear down. You're not going to try to roll out of the car like we did in 2022 when the Fed was barreling into a hurricane and there was no way to do anything but sell all assets and get out because they were going to drive us straight into the heart of the storm. So that, to me, is one of the big shifts here. I couldn't help but notice, though, today, guys, did you see the sector breakdowns when we said everything was all undone? It feels like people just wanted to get into tech today because every single sector that I follow is down on the day. I see 6 sectors that are in positive territory: XLK, SMH, XTL, which is telecom. What sits in the telecom ETF? If you guess Netflix, that's correct. We have home construction, biotech, and gold miners. So 19 of the 25 ETFs that we track here at Overtime were in the red. It feels like this was about everyone shifting out of whatever and just trying to get their hands on something related to yesterday's Stargate project announcement. Dylan, is this going to be a problem for the market? Like if tech sucks up all the liquidity again, is that going to be a problem? Should we be avoiding the Russell?
Don't you think if your concern is that big tech is going to suck up all the liquidity, that you've got yourself a mighty bullish market? I mean, if your concern is that I guess what I'm getting at, you're talking about, it's another version of concentration of wealth. But I don't think that that's the case. I think the risk is one we can't foresee. I mean, not to go all, philosophical, but I think the knowable risks are by definition less risky because of their knowability. But the question is, when you have this much resource around this much tech, I think you have this sort of the future risk of technology risk. Murder robots, that's a risk. And you have all sorts of systems failure risk, fragility risk, because you have a system where everything is dependent on a single or a short list of variables influence the vast majority of, life resource sort of stability. So I'd say the risk of the system we're in right now is one part fragile, and one part it's like a system designed to solve the wrong problem. To the degree to which the problem is the general resources and time of people, I don't know that putting the tech robber barons with the president of the United States, who's Donald Trump, is the best way to create the most broad pool of opportunities and resources.
Well, and interestingly, even the robber barons don't don't agree among themselves. Chris, you pointed out something that I know you're very much positioned to expound on, because you brought this to my attention earlier today. Sam Altman and the Elon of Musk, they're apparently sniping at each other, despite the fact that everybody is apparently in agreement that the kissing of the ring must commence. So how long before these personalities turn into biting at each other's throat and this whole thing unravels because everyone, including the president, are of this personality type?
I find this interaction here to be very fascinating. Why is this interaction fascinating today? We keep talking about the Stargate project. It clearly impacts the distribution of assets and capital flow today. Everyone's buying tech names and nothing else. Let's move you over here. On the left, the announcement from OpenAI yesterday, a response from Elon Musk, one of the president's advisors. He has an office in the Eisenhower Executive Office building now.
First buddy.
He says that the announcement that Sam Altman made alongside Masayoshi Son from SoftBank and Larry Ellison from Oracle and the president of the United States, Donald Trump, that was all bullshit.
Yeah.
SoftBank doesn't have the money, and Elon Musk says he has that on good authority. Sam Altman comes in today and says, wrong, want to come visit the site first, blah, blah, blah. But I present to you the market on the right. Will Elon Musk leave the Doge? Dylan, maybe, I don't know, but what was the book, The 48 Laws of Power? Rule number 1 is, don't outshine thy master. Yep. I can't imagine Donald Trump is feeling pretty happy that his chief advisor, Elon Musk, is out here literally, talking smack about his signature infrastructure week achievement and, project now that clearly has catalyzed
big
stocks
camera
to tire.
Opportunity.
Yeah, and you know what, this is one of those things, Dylan, we always say, he talks a big talk, it's a lot of bark, but there was no bite in 2017. This time around, because of the lame duck aspect of this and only potentially having majority, a mandate for 2 years, if you want to call it that, because of the trifecta, then they're going to do a lot early up front this time around, right? They know what to do. They know what they didn't do last time. They're going to have an agenda. They're going to act on it. And so this is something that undercuts the agenda. So maybe there's a trade here, Dylan. Maybe we should be buying the yes contract.
Yeah, I mean, I disagree with your analysis. I mean, this is far afield.
Why is that?
Trading. Because I think Trump wanted to put Sam Altman in front of Musk because as a way to diminish Musk back to being one of the tech. Like Musk has risen to the point where he's not one of the 5 or one of the 10 tech bosses. He became the man, the richest guy, the. So I actually perceive the Sam Altman move by Trump to be a chessboard move to move Elon back to a sniping world of tech CEOs here, 10 as opposed to the guy. And because Sam Altman is basically the arch nemesis of Elon Musk. And Trump knows when he sticks not Larry Ellison, not Mark Zuckerberg, not whatever, but sticks Sam Altman in the center of the press conference with a $500 billion commitment. Elon just shrank himself back to a tech CEO from being a government minister. Because a government minister doesn't tweet like that. What's that?
Do you think that he's going to
short then?
Well, I'll say, do do you think that frustration builds here then, right? Like you and I have argued historically, maybe, I say historically in the past few weeks, that maybe Tesla is overvalued a little bit, but I couldn't help but notice on a day like today, when the market is shifting in all the big AI tech names, Tesla's down. So is Elon Musk's star starting to lose its shine in Trump's sky? Because that sets up a really fascinating dynamic across a number of markets. If Musk is going to become bitter and recalcitrant and like, why are you?
But I mean, I don't think that boy. I guess the question is, what if Musk just becomes a happy 1 of 10 as opposed to the happy 1 of 1? What if it doesn't go? What if it doesn't go to pure?
It doesn't seem to be his nature.
That's what
it doesn't go to I hate you. Let's just say it goes to I'm one of the boys again.
He was never one of the boys. He was not one of the boys, and then he became the first buddy. Right? There was like no transition. It was like, I'm going to throw all my support.
So you're saying this would be his, right? But speculating on my point is you don't know what's going to happen.
No,
I feel like you have an assumption that it's going to become hostile when it goes when it's no longer love, that it will be hate.
No, I think it's a function of Musk not wanting to feel diminished himself, being the world's richest man, and that this, given how early we are in this little tiff, considering this is just being tweeted out right now, I think that maybe this may be undervalued, right? Will Musk leave?
So you're saying we buy the Doge Musk departure, we buy it?
Because those odds are probably understated and we're just at the starting point of these potential tensions. And I wasn't even thinking about this through the lens of the Sam Altman and Musk being rivals perspective. That you reminded me of that. They do have their longstanding beef because of OpenAI not really being open and Elon Musk's early money in it. You know, if Elon Musk had a lot of sway, you could make the argument that he could have brought out Microsoft, Google, another company with another AI, right? You have the guys from Claude out there from Anthropic, but instead he chose Sam Altman.
Exactly.
That sends a message but then again, if that's sending a message to Musk, and Musk is the guy who needs to be on top. He's a guy who just admitted that he's been getting help playing. I think he's been getting help playing video games, which is just odd as a gamer. Like, why would you do that? That takes all the fun out of the playing of the games. I think those odds are underpriced. I don't know if it's going to go to 100, but I think that we have a chance for some nice.
Let me ask you this: would you rather be long the Doge departure option or long a Tesla put?
I mean, it's a Tesla put for me if I have to make the call, but it's more like a NASDAQ put for me.
Okay.
Because if this extends out into chaos in the oligarchy, as it's been getting called, then that's a very different view of the NASDAQ, maybe, as a whole.
So if the Doge committee, the former U.S. Digital Services Office, is going to expire at the end of July 5th, 2026, Tesla, the closest dated option expiry is 512 days out at June 18th, 2026. So I guess we'd have to go to December 18th right now. But if we were looking for Tesla to return to its pre-election levels because Musk gets his clock cleaned, I mean, like, you could buy a put spread here and it's not really, I mean, if you got $1,400 sitting around in buying power, but it's not really that expensive a way because it's so far out of the money. To express this particular view. Now, would I rather risk $1,400 or I could structure a trade in Kalshi? Well, we make money when people trade on Tasty Trade, Dylan. So I think that answers the question. No, but jokes aside, that's a really, I think, 43 cents over 57. I think I would take the Doge trade. I think that the odds, you could have a situation where Musk has a falling out from Doge, but Trump doesn't necessarily want to get Musk and his money against the Republican establishment. So they have some sort of ramp off, kind of like with Vivek Ramaswamy, where Vivek is now getting ready to run for Ohio governor with Trump's support. So Vivek kind of get pushed out of the picture after the H-1B visa fiasco, but he's still going to have Trump world's backing, if you will. And so there's not really a need for Vivek to be openly confrontational with Trump, despite being sidelined after, being one of his biggest advocates in the news for the last several months during the election cycle. So I would rather play the end of Doge play here, Dylan. I think that's more likely than seeing Tesla decline, unless Musk and Trump have a real significant falling out.
Just because the end of Doge is a pure play on the broligarchy and the degradation thereof, whereas Tesla is a multivariable equation of car sales and global glory.
Yeah, and it's nice that as a head of a department within the White House, that Elon Musk gets access to classified information. That's a very fascinating feedback loop where a defense contractor also has access to all the classified information that would potentially go into decisions relating to those defense contracts. But I want to refocus away from the Musk drama, because that's bullshit and boring, and focus more on the important thing, which is the actual AI super story here. What was notable about yesterday's announcement when it comes to this particular Stargate project is that the $500 billion that's being invested is for OpenAI. It's not to create like some super AI infrastructure that serves every single company in the country. It's just for OpenAI. So if OpenAI is saying that we need $500 billion of infrastructure build out to get this done, then we're talking about probably trillions of dollars if we want to have Microsoft and Google and Meta and all these other companies build out their own AI projects as well. And that means that we're going to need to see a lot of demand for power and electricity moving forward. This morning, Nick and I were talking about what kind of companies would benefit as a knock-on effect moving forward from AI adjacent stocks besides the NVIDIAs and the semiconductors of the world, which, these are working out well. We had an NVIDIA trade put on a few days back, long the 155, short the 160 call. And so out of the money, but a move back to highs. Looks like it's coming together here. Happy for that to see. But what about non-names, non-semi names? One of the names that popped up on our radar was this company called Vistra, VST. They were up 257% last year. They are a power provider, a private independent power company, and they've been helping provide utility service for these data centers. So I used our TastyBot to find a list of companies that are similar to this VST, that have similar profiles, companies that would be used to help bootstrap the AI data center revolution. Just a few of them out here, just for some food for thought as people think about some of these names. Chegg, Constellation Energy, CEG, that's closing in at an all-time high today. There's also EPD, where I now have a position that should be on the follow page along the 35 call, short the 37 call. There's NGG, National Grid. There's AEP, American Electric Power, which kind of looks like a bull flag from my view. TC Energy, TRP, which likewise seems to be flagging. There is EXC, Exelon, which I likewise should. I was filled on some calls here today for the follow page. Cheniere Energy Partners, CQP, which earlier today was at an all-time high, and then Fortis, FTS, which probably the ugliest looking chart of them all, also the smallest market cap. The point is, here are 10 tickers for 10 stocks that have varying levels of liquidity. Obviously, Fortis at 485,000 shares traded is not really much of anything. You go to Constellation, it's 4.54 million shares traded, $100 billion market cap, a little bit more liquidity there. But I really think that the next leg here, the bottleneck, as I've been reading more and studying more about this AI build out over the last few weeks, something I was spending a good deal of time over Christmas doing, was that we don't really have a problem on the chip side. We can make the chips. The problem that we're going to run into now is, where are we going to get the electricity to power these data centers? A lot of these names outperform
I thought Elon Musk said you could do all the electricity for the world in with solar panels, just with not very much.
Yeah, if we become a Karstev type 1 civilization, we harness all of the power in the solar system, with our Dyson spheres, that'd be awesome. I played enough of those games, but like that's not happening anytime soon, right? So we run into that very real bottleneck.
So what about like then it's a boom of hydroelectric, the St. Lawrence River Valley, northwestern North America, all that hydropower in the north.
With the permitting reform, with the small modular nuclear reactors, I know, I think Oklo has been, on fire. I think this is another new all-time high here today for the stock, right? This is nuclear reactors. So it feels like the play this year may be energy, but not like the traditional oil and gas energy names. And granted, the play last year was also energy to a certain extent. Vistra outperformed NVIDIA. But I think we're still there right now. And when you look at the scope and scale of this private-public partnership, Trump administration, OpenAI, SoftBank, and Oracle, if this is going to be replicated at scale or some scale similar to it, the demand on the U.S. electrical grid is just going to increase dramatically more and more and more. And I'm going to place a bet that we're not like a country like South Africa. We're not going to have rolling blackouts across the United States to keep the AI data centers on. We're just going to build the power supply that we ultimately need. And I think the market's snipping that out too here. So I have some exposure now across the board in a few of these names. I think EXC, ET, and EPD are now on the board as names that I've added positions into today on the long side. So that's my little spiel here. Dylan.
No, I totally. I mean, I love it. I love it. I mean, the only question is pricing, right? But I mean, even when you saw the Starlink routine, I did. It's obviously whatever they're going to do is going to take a ton of electricity, and I love when you dig back in. That's what the reason the stock market is so fun is because these things happen. And you can dig around and find these little electricity adjacent publicly traded stocks. Who knows? I mean, I guess the only question I would ask you is, would you put a marginal dollar in? That looks to me like it's like, I'm late to the party from looking at that chart, if I'm me.
Maybe. And it kind of looks like a meme stock chart. I suppose the way that I'm playing this is I think this is a thematic trend that we can play on the long side for portions of this year. So operating right now.
That trend being long electricity demand of megatech.
Yeah. And so I see the market that's just pulling off of the highs here, move up through 35. It doesn't seem like it's out of the question short term. EXC, I kind of just like the trade setup where, where are we here? Sorry. There was ET, right? I kind of like this trade setup. Positions, EXC, there we are. This one longer term, going to the weekly chart. And back 20 years. This feels like a chart that's rounding out here. It fits the criteria of a stock that does the similar business to Vistra. And that's really all I was looking for. And it has a pretty good float. And that technically looks like it is trying to bottom in a very significant way, having broken the downtrend. And we have a nice little theme working for us here. So I don't know. So I could play in this side of the pool. I see enough technically here with enough, fundamental backstop of having a new catalyst, and we just don't have the build out right now. I think it's a really important signal that literally before the end of the second night of the Trump presidency, he addresses the infrastructure weak stuff right off the bat for AI. Like that's the hallmark thing so far.
Of course, if you want to see the flip side, take a look at ICLN, which is the clean energy ETF. We've been talking about how that broke down from a big range, basically at the onset of the Trump victory. And this was a short that I've been talking about basically since then. It's continued to make this progress. And so, and not see the kind of thing where you say, well, we already have a lot of infrastructure on this. If we need more electricity, wouldn't this be a logical place also, since there's already infrastructure here? But I mean, clearly the answer is no.
No, I still
at least in the market's perception.
But you see how it's so funny. I can see here on the chart the Monday, November 4th, right after
it's right there,
that Iowa and Seltzer poll, right? And then poly market odds for Pennsylvania flip to Harris, and then Trump wins, and we immediately break the range.
Yeah.
Right. We lose the uptrend, we lose the bounce, we lose the swing low, and then we just crack on down.
That's basically like I sold it into that gap. So once it gapped, I was like, oh, okay, this is going to go. And it's been slow, and you had to have duration on your side because it did very little initially. But obviously, the market sees a theme developing here.
It's clearly a priority for the Trump administration to lay the groundwork for the infrastructure for the AI revolution. A lot more than I thought he would be, just to be frank about it, which means I obviously didn't have enough exposure in semis, although, SMH continues to work. This is somewhere where we've had a position on for a little while now, the long 260, short 270 call spread. There are still 30 days to expiration, so we're holding it patiently, but there is an important signal that I saw here today when doing a quick scan. Today we set a new 3-month high in SMH. Likewise, we also set a new 3-month low in volatility for IVR. We have not seen that combo of those two things occur on the same day since you go back to here, November 22nd, this week, right around Thanksgiving 2023. Now, why is that important? Because we break out to new highs here after doing a multi-month consolidation in SMH. And November 23 was historically a pretty good time to get long semiconductor stocks. We have not seen another reading where the market pushes to a 3-month high and we get a drop to a 3-month low in IVR in the same week span since then. I think that's an important signal, and it's occurring as we break out right now. So my quip for tomorrow is, while we still have the time and now there's a little bit of a pullback here, I'm going to be rolling this position to buy the 280 calls. I think that we're going back to highs in the semis. The semis have been doing nothing for months. Nancy Pelosi has semiconductor stocks in her profile still, Dylan. What other rationale do I need?
I mean, you really don't. I mean, if Nancy Pelosi's in there, you really can stop thinking about it.
The real question is Nancy Pelosi in there for a 45 DTE cycle?
Yeah, you just need to get a sense on how she set this thing up. I mean, she's the best. She's better than Gordon Gekko. She's the best that ever was, I do believe.
Speaking of insider trading, Dylan, I tagged you in a tweet yesterday. Donald Trump said that he has no idea of anything related to the Trump meme coin. Your thoughts?
The man is a pure, absolute genius. First you rake 50 billion and then pretend you're finding out about it in the press conference and then be like, how could I know? Who could know these things? Who would
when
know?
80% of the float is owned by your family. How could you know?
Who could possibly know? Who could these whiz bang, these computer things? I can't keep up with them. Who would know?
Somebody ask Jared.
I mean, the brilliance is, I really do think that's why I'm actually optimistic, is because I believe that it is a cultural moment where there's going to be risk taking, even at a moment where there's also a tremendous amount of risk because of the nature of the way decisions are made in terms of power is compromised, basically. But at least it's compromised by a conflict of interest, but it's a conflict of interest that's apparent.
Well, and this is, I think, why, to bring
Which
it
makes
full
it less
circle,
dangerous.
To bring it all the way full circle, I think this is exactly why the cost of money is such a point of consternation for the markets and why they get so up in arms about plus or minus 25 basis points, as we've seen over the past 2.5, 3 weeks. The market was already much more hawkish in its pricing versus the Fed's September kind of dovish capitulation, if you will, to market pressure. By the beginning of November, the market had already made all of the repricing essentially done. The yield curve, as it's implied in Fed funds futures, has barely moved, in fact, since the November FOMC. Even though the official change in the forecast was December, we've obviously had a bunch of data since then. Things have barely moved. They've kind of wiggled around 25 basis points or 50 basis points. Because if you go less than 25, as we talked about before, then the Fed hasn't just taken its foot off the gas, to use Chris's metaphor, it's flipped the car around. And that's a whole other thing. So when you look at then the environment that you're painting here, Dylan, you have to say, okay, well, high risk, high reward is how you would describe this environment. And if you're going to get money that isn't too expensive, you're going to roll the dice. But if you're not going to get money that's not too expensive, if the money is going to end up more expensive than you want it to be, especially in a year when finally everybody's COVID loans come due, well, then you're not going to want to roll the dice, period. And then what you have is a lack of desire to engage, not because you don't think there's opportunity, but because you're just not going to outlay the capital on a flyer. You're going to say, you know what? I'm gonna do the Scrooge McDuck. I'm gonna surround myself with my cash and wait.
I say, don't do that. Metal's actually hard, so if you dive into the pool, you will break your bones.
Listen, if I have learned nothing from DuckTales, I know nothing about money management, so I'm just going to have to listen to what the duck says.
We're sticking on with some of these things because it's early days of the Trump admin, so there's a lot of, this is an administration that's very public, as Sosnoff might say. This is certainly not, again, on my bingo card. Trump seemed to be signaling a softness towards Russia throughout the campaign. That's not the language he's using publicly right now. I don't know if people saw this tweet today. He said, I'm not looking at Russia.
He's scoldy.
I love the Russian people and always had a very good relationship with President Putin. This despite the radical left's Russia hoax. We must never forget that Russia helped us win the Second World War, losing almost 60 million lives in the process. All that being said, I'm going to do Russia, whose economy is failing, and President Putin a very big favor. Settle down and stop this ridiculous war. It's going to get worse. Yada, yada, yada. Time to make a deal. Dylan, that didn't seem like what we heard a few months ago. I thought, at least my personal interpretation was he was going to say, Europe, this is your war. You haven't spent enough money on NATO. You didn't listen to me during my first term. You're on your own. You guys, we're not supplying any more arms. We have our own problems to deal with. Good luck. That's the isolationist beat we heard so much about. Is the war going to go on longer, or is Trump actually going to get a settlement here?
I mean, the answer is Trump's going to get a settlement, and this is just posturing. This is just bluster.
What if this is Nixon's peace with honor? We're just gonna lean in heavier, because if this is the next iteration of the madman theory of geopolitics, which Nixon was such a successful practitioner of, with Kissinger at his side, if that's what this is, then this might be the first of a rhetorical volley that sort of sets up the proverbial bombing of Cambodia. Not literally. I don't think anybody's going to bomb Russia from our side directly. But if you wanted to say, sort of on the campaign trail, look, I have a great relationship with Putin. We're cool. As soon as I'm in, I'm going to call my guy, and it's all going to be good. And then it turns out his guy is like, well, no, that's not what we're doing. Now you're going to say, well, now I look stupid. No. That's not, you misunderstand. I said we're going to have a deal. And then you lean in. I wouldn't be surprised if this turns into escalation before it turns into de-escalation eventually.
I might. I don't have this on the follow page because this just doesn't fit the criteria, but the India UAE trade still seems to be going, right? I know Trump has his posturing here, but if our thesis is that the war is going to end, we're going to see this capital that's been locked up in Europe, it's going to go somewhere. Where is it going to go? Probably a financial intermediary that's been neutral. Will those reserves go into fiat currencies or go into hard assets? Probably hard assets. Will Russia, China, India have their little jig where they're selling oil under the table, undercutting the actual float price on global markets? Probably not. I don't know if that's falling apart yet. So I see Trump's posturing here today, and it certainly seems different and sounds different and feels different. But UAE, Dylan, how long have we been talking about this as part of the war?
We're ready for this.
It's another high today, and very much looking like that Russell 2000 chart from a few years ago, breaking out to the upside here. India, on the other hand, that head and shoulders pattern continues to break down, and Indian stocks were down today. So in terms of that narrative being tested, it certainly seems like it's being tested right now. I guess it's a different end of the war. The war's still ending. The sanctions may be lifted, right? Donald Trump says he wants to throw Russia's economy a bone. That means removing the sanctions, but maybe not on the terms that we thought it would. I think when I heard Donald Trump say the war is going to end, he'd be like, Russia, take eastern Ukraine. We don't care what happens there. That's not our business. But it seems like that may not be the answer now. So either way, it's perhaps the most interesting story that we're watching, but thematically, UAE, India still working out well. These breakouts or breakout in UAE, breakdown in India, continuing to pay some dividends. Gentlemen, before we wrap this up, I wanted to loop back on to what we discussed at the end of last call there. I was getting poked some fun at for having a citation on hand, but I think it's an important citation on hand because I'm tracking all of the executive orders that Trump's doing and trying to figure out, again, part of the job here, opportunities to make money in this market, understand how things are going to play out. I couldn't help but notice that yesterday Trump issued an executive order repealing 11246 from September 1965. That was signed by Lyndon B. Johnson at the time. It comes a year after the Civil Rights Act is passed. And this is kind of important. In 1964, when the Civil Rights Act is passed, Title VII stipulates that employment discrimination based on certain characteristics is prohibited. Lyndon B. Johnson takes that further a year later by ultimately signing this executive order that says if you're a federal contractor and you want money from the government till, you need to fit certain criteria. You have to have, women at your place of employment if you are in a certain community, and half that community are African American. Half your staff better be African American, right? You have to have the demographics that match the area in which you're working. But it's not until Richard Nixon enforces this I believe it was the 1970s. He sues a Philadelphia construction company, if I recall correctly, goes to court. Nixon's administration wins. It becomes the nationwide standard. What happened yesterday is effectively saying that 25% of companies in America that have federal contracting no longer need to have this criteria applied to them when they want to get federal contracts. So just working backwards from this, if you want to have a federal contract, you're going to structure your company in a certain way with a certain HR department, certain policies and provisions for time off and inclusivity and diversity, yada, 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 because you want to check these boxes. Now you no longer need to do that. What does this ultimately mean for the American workforce and productivity? Who knows? I certainly don't have an answer. I'm trying to figure this out. But there are some things that are happening on the administrative level that are really, truly going to fundamentally change the economy. For better or for worse, I think these are good policies. So I think they might change the economy for the worse. But who knows? Maybe I'm missing a beat here. Someone correct me. In any event, these executive orders are coming fast and furious. And we're seeing with the announcements and the pace of the announcements that a lot of capital is moving around very, very fast these days. Tech obviously being the beneficiary today. But I think it's important to try to get a grip on what's actually occurring, not be too emotional about it, one way or the other. Like the crypto bros have been on the Buttcoin subreddit all day today, reading enjoyable stories of people who bought the Trump coin at $65. And they're like, oh yeah, I took out a loan and bought this, and now I'm down 70%. It's like, well, we always say, the meme coin pool is not It's not for kids. It's not for adults. It's not for the, like, you really shouldn't be trading it if you're trying to be risk prudent. But there's a lot of opportunities, good and bad, coming out there out of the woodwork right now. So just try to keep your head on a swivel, right? Don't get too excited. Don't get too discouraged. I know a lot of people in the chat. I've seen the tweets and the DMs at me. Chris, I think you're too optimistic about this. Chris, you're too pessimistic about this. Apparently, I'm a Democrat to some people, Republican to others, libertarian, socialist. I don't know. I'm just the guy here who's trying to have this conversation with you all and help point all of us in the right direction. But the executive order is not done.
Man, you're just trying to do the best a man can. But you're an optimist, Vecchio, and I like it about you. I like it.
Got to have something to believe in, Dylan. And
but that's why it's good that San Francisco has such bad weather. See, we need Ilya to stay in a foggy and cloudy environment because somebody has to be around to be like, I don't know about this, buddy.
Well, I just got a beautiful velvet sofa delivered here to the couch today, so I'm going to go lay down on that before I see Victor Jones and The Price of Truth at 6 p.m. Eastern. But before we get there, overtime's out of time, and you have Ilya Spivak coming up next with Macro Money, so be sure to head there first. For Dylan and Ilya, I've been Chris. See you tomorrow.
See you there, everybody.
Dear Braden, big thanks to you and the nerds for the wonderful tech support. Of course I back everything up to cloud, because I'm 60 years old and I know what a cloud is. Yours truly, Larry.
Sometimes it feels good to get smart. Get even smarter with live trading insights. And some live taunting.
No, your office is right near a different. You're like closer to the.
Near what?
Whatever.
This is English. You should watch him read.
From the smart mouths at tastylive.
Twitter versus Facebook. A rap battle. First up, Facebook.
Twitter, I'll snuff you out like I did to MySpace. I'ma have to erase your little Twitter face. Warm it up, Facebook, I'm about to. Did they make an Oscar-nominated movie about you? Check my school out, I'm at the top of my class. My main interest is listed as kicking your ass. I help dictators get thrown over. You help the cast of Jersey Shore get overexposure. I'm too Titanic for you Twitter and twist. You bird-ass tweets, stick to the branches. I'm root deep, universal expansive. Twitter better get lost before you get poked. What? What? Yeah, this is Twitter. Check it. At Facebook, can I attack you? Yes, and I could do it in 140 characters or less. Brevity's the soul of wit. I'll make this quick. Hash mark. Facebook is a dick. Retweet. Yeah, I'm backing that ass, and I'm young and I'm brash, and I'm packing that cash. Stick with the kid, I'm an early adapter. Your old Facebook played out like Napster. I make it real easy for family to talk. I make ex-girlfriends real easy to stalk. I show you life in real time is completely amazing. I show you which celebrities are totally crazy. From Blitzer to Sheen to Kanye to Rom. I run with stars. Facebook is a place for your mom. What's the matter, Zuckerberg? Don't like how that sounds? I got 1 million customizable backgrounds. You're so totally boring. My card's on the table. Hash mark. Facebook is disabled.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Stock markets are back at their December highs, and the markets still seem to be basking in the afterglow of positive economic news out of the new Trump administration. They announcing a big splash deal for AI infrastructure alongside OpenAI and SoftBank. But the macro calendar still is bare bones. A very quiet day here and a very quiet week. But that's only in the U.S. And if we look a bit outside, the situation gets far more interesting. And what we're going to do here today on Macro Money is focus on Japan. Because what we have coming up this week is something that not only gives us a different place to look where event risk might inspire macro-driven volatility, but a window into what the world's or one of the world's leading central banks is, first of all, doing differently from every other central bank. Secondly, what that may tell us about where the Fed is believed to go next. That, of course, has been a crucial part of the calculus for stocks, for bonds, for currencies, and for assets writ large. So let's set the stage here a bit and consider first, there's a very significant disparity in the outlook for global interest rates this year, where one central bank and one only amongst the majors is seen raising rates and everybody else is cutting. This right here is the priced in policy change for 6 of the major global central banks. You can see them all right here. And what you find is this right here is the zero line, which would be no change in policy this year. Notice only the Bank of Japan is slated for rate hikes, and very helpfully, they're priced almost perfectly to 50 basis points. So we are expecting to see a pair of standard-sized rate hikes from the Bank of Japan this year. Note that almost everybody else is somewhere on a range of between 100 basis points and 50 basis points in cuts. The Fed is a little bit light here at about 38 basis points. That essentially gives us a one rate cut plus a 50-50 shot at a second one kind of outlook. But that Fed view is the second most hawkish of the bunch. No one other than the Bank of Japan is expected to raise or even stand still on rates. And the first of these rate hikes appear to be on the menu for this week. This right here is the futures implied yield curve. And we can see here on the bottom the spread between the rates implied by that yield curve and the current policy rate to give us a sense of how much change we've priced in. So we can see here that relative to the current policy rate of 0.25% or 25 basis points, we have over here a move approaching 50 basis points by February, a month where we don't have a policy meeting. Indeed, we have one this week, suggesting that we already have at this stage 20 out of 25 basis points basically baked in for a policy change by then, implying, of course, that this week is overwhelmingly likely to see a 25 basis point increase. In fact, the probability of one boils down to 76% when we look at what is currently in the markets. The second, recall, we have here 50 basis points, so that's 2 standard hikes. The second one starts to appear overwhelmingly likely over by October. So we can see that by August, the probability, once we get to about a 40 basis point pricing here on the delta, we can already see that we're north of 50-50 for that second hike by August. By the time we get to October, the likelihood is close to 80%. By the time we get to the end of the year, it's a near certainty. 73 basis points out of 75 priced in by year end. So we're clearly seeing a path forward. Now, we had speeches from Governor Ueda last week, as well as Deputy Governor Ryozo Himino, and both of them flagged that they were likely to discuss and to bring up hiking rates at this first meeting of the year. And so that seems to be the kind of wink and nudge that suggests they're getting ready to move. We're almost certainly going to have this opening hike of the year occur this week. And indeed, with how much the markets have already discounted it, it would be very unusual for the Bank of Japan to let the markets down at 76% probability. It is almost the case that the central bank's credibility would be in question were they to have signaled so overtly that this is coming, for the markets to have taken them at face value and then to be let down. Leading into this, helpfully, will be the CPI report. It is expected to show that headline inflation rose to 3.2% year on year, that the core measure, which in the case of Japan excludes food, fresh food, but keeps energy, that is expected to go up to 2.9%. Both of those would be the highest readings since October of 2023. So it would make sense, ostensibly, that we would have a central bank that's biased to hike under these circumstances. Note, however, where all of this inflation is coming from. Overwhelmingly, the largest component of headline inflation is, in fact, food. And the second largest is fuel. If we look at the breakdown for the November numbers, the last ones that we have already reported, of the 2.9% that we saw at the headline, and again, we're expected to go up to 3.2 for December, but in November, we were at 2.9. Of that 2.9, 1.38 percentage points was food, 0.47 percentage points was energy. To put this another way, 64% of headline inflation was food and energy. And in fact, ever since May of last year, food and energy have made up over 50% of the whole, and the average over that period has been about 60%. So this is a story about imported inflation. Japan imports almost all of its energy, imports the lion's share of its food, close to 60%. So this is very much a story about inflation being imported rather than a story about the economy growing hot in a structural way. In fact, if we take a look at the latest purchasing managers indexes, we can see that Japan's economy seems to be basically pinned to standstill. We have minor growth in the service sector, minor contraction in manufacturing, and both of them are sort of hugging near the 50 line. In the logic of PMIs, of course, 50 is neutral, above 50 is growth, below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. So we can see that the situation in manufacturing has been anemic but tending toward contraction basically since the middle of last year. On the service side, things have been more volatile, but we've slowed in the second half of last year to something that's approaching standstill. And moreover, if we look at the way that Japanese economic data has performed relative to expectations, we can see that this Citigroup Economic Surprise Index is basically hovering at 0. Now, what this means is that economic data outcomes are expected to register relatively in line with expectations. So the markets have benchmarked where Japan's economy is fairly closely to what reality has actually confirmed and reinforced. So this state of affairs is likely to persist. It seems like we are anchored toward a kind of slow, grinding, positive, but hardly illustrious growth out of Japan. And with that, you once again get reinforcement that this inflation story is really about how much it will cost Japan to import energy and to import food. Because the building of any kind of meaningful domestic inflationary pressure under these circumstances looks unlikely. So what's going on with importing food and energy? Well, this obviously comes down to two things. First, it's the price of food and energy, and second, it's the value of the yen. That is, the purchasing power of Japan's currency on global markets, and the interplay there. How much do things cost on global markets, and how many yen do I need to spend to buy those things? So let's look at the cost structure first. We take a look here at Japanese CPI in the red, the price of food from the UN's FAO Food Price Index in the green, and the Brent crude benchmark for the price of crude oil as a stand-in for energy prices. We use Brent here, the global benchmark, not WTI, the U.S. benchmark, because, of course, the U.S. is uniquely a major consumer, but also at this point the largest producer, where the U.S. ships more petroleum, produces more petroleum than Russia and Saudi combined, for example. So the price of oil in the U.S. naturally skewing lower because domestic output is so very prodigious. Instead, we need a cost structure that's a little bit closer to Japan's. Now, the actual price here is the JCC, which is the Japanese crude cocktail. It's a mix of grades and prices. But the Brent is a good kind of liquid benchmark for the kind of trends that Japan is likely to see cost structure-wise. And really, it's the trends rather than levels that are of greatest interest. Now, we can see that if we lag CPI by 7 months, these things start to line up fairly closely, implying that it takes about 7 months, give or take, for trends in global food and energy prices to work their way into inflation numbers. What we find is that basically since the middle of last year, a little bit earlier, maybe around April, May of last year, these things have been moving in opposite directions. So food prices have been inching up a bit after a long post-COVID slide. Energy prices were sliding in tandem So obviously helps to explain this great relief in Japanese inflation. Things have stalled since these relationships became somewhat inverted and pulling things in opposite directions. Now we can see that the most recent bounce has come where both energy and food were going up at the same time. But now we're entering into a space where we're going to have to start to price in last year's April to September or so sell-off in crude oil and the impact of that on energy costs more generally. So looking forward here, it's possible that we have a little bit of a cap on Japanese inflation because these key influences are now moving at cross purposes, and we are just on the cusp of pricing in last year's crude drop. Perhaps from now, about 5 months forward into about the middle of the year is the drag there. So as we look at then the decision-making matrix for the BOJ, we think, well, maybe the BOJ might have already talked their way into this hike this week. And if that's the case, and the probabilities of that hike on the board suggest that indeed it's starting to look like overwhelmingly likely of an outcome, rather than something that has significant surprise risk, then it's probably already priced in that this is going to happen from a price action perspective. And what the focus of the meeting really is going to be for traders and where the speculative interest is going to be is in the updated economic forecasts from the BOJ and what that says about where they're going beyond this meeting. As we said, the benchmark at this point is at least one more 25 basis point rate hike that occurs sometime in the fourth quarter, almost certainly, and could happen as soon as August. Now, if the forecasting suggests that the BOJ may not be as worried about inflation or may not be as cavalier about future rate hikes because its main influences are at cross purposes and look like they're going to, at minimum, anchor prices around these levels, that, of course, would be something of a surprise. If, on the other hand, the BOJ didn't do that and instead dialed up rhetoric, where you might see the inflation expectations nudged up higher, and you might then extrapolate, well, maybe they're not going to have to go just once. Maybe they'll need to go twice. Maybe we're not going to get 50 basis points out of the BOJ this year, maybe 75. Well, that too would be a surprise in a different direction. Now, from the perspective of the BOJ, you might think, well, you get a bit of breathing room here on inflation. That's helpful time to consider, especially for a slow-moving central bank. First, because you're approaching the wage-setting season. The Japanese fiscal year rolls over in March, and so you're approaching wage negotiations that are going to define what you lock into structural wages, and that, of course, is a big bit of annual inflation stage setting, and at least establishes something of a floor. And the BOJ might want to see that before really deciding one way or another just how vigorous they need to be. But of course, the other side of this is that much of what happens here isn't decided in Japan. And this is why this is such an important lens on the Fed and on broader markets. Now consider here, in the red is the average value of the yen against its major counterparts, the dollar, the euro, the pound, and the Australian dollar, the world's top four most traded currencies, according to the latest data from the Bank of International Settlements. Consider that it moves inversely of both U.S. rates, this is the 10-year rate for the U.S. in the green, as well as the average of global interest rates more generally. Germany, the UK, Australia, and Japan is what we have in the blue line here. Now, why is this occurring? We might think, okay, we have a very different mix of monetary policies, but everybody is cutting. If everybody is cutting, what's going on here with yields? Well, first and foremost, of course, this is a weekly chart, so this is some years here. But even most recently, this is the tail end of last year, we can see global yields are on the rise. And the Japanese yen has come off its highs as a consequence. Now, this is, of course, because while Japan may be the most hawkish central bank this year in that it is hiking rather than cutting, absolute value rates in Japan are very, very low relative to the rest of the matrix. The European Central Bank is the next one up, and it's up at close to 2% here by the end of this year, after that round of cuts, whereas everybody else is sort of clustered here in the sort of upper 3s to 4s area. And so what you then see, Bank of Canada, of course, somewhat in the middle, what you see then is how it is that the yen is so sensitive to global rates. This is that carry trade that we heard so much about last year when it seemed to go haywire. The Fed, as we know, is the bellwether for global interest rates writ large. This is because those same Bank of International Settlements numbers tell us that 88 or so % of global monetary transactions are settled in the US dollar. So it's not even close as far as transactional currencies, and that's because the dollar is, of course, so liquid. In fact, its liquidity is so abundant that it is sometimes cheaper, oftentimes cheaper, to trade one currency into the dollar and then into a third currency rather than just a bilateral transaction from the first into the last, because the two are independently less liquid, and so the transaction cost is higher. So as you get changes in Fed monetary policy, you have the change in the cost of borrowing dollars, but because the dollar is so ubiquitous as a unit of transaction for global economic activity as a whole, the cost of borrowing dollars is also the cost of borrowing, period. And so you see that as you've seen the Fed respond, sort of start talking about responding, that in the beginning of 2022 actually responding to inflation and hiking rates, you've seen interest rates go up elsewhere in tandem. And although we've seen here since about mid-September, U.S. rates shoot up, even while other central banks were sounding more dovish, especially in Europe, their rates went up anyway, because it is the Fed that's setting the pace. Now, if global interest rates are going up, and everybody's rates are higher than Japan, well, then it makes sense, regardless of whether Japan is hiking or not, by a pittance here and a pittance there, to borrow in yen, which costs very little, and then buy both other currencies and assets denominated in other currencies that yield more, and thereby to extract a yield differential. If I'm paying less on my borrowed yen than I am earning on holding assets that yield more, well, then I have a positive income stream. That's the carry trade in a nutshell. So as global rates go up and this kind of thing is encouraged, the yen is sold off because people borrow it and then sell it for other assets. And this is that window on what the Fed may do next. Now, of course, this devaluing of the yen makes it all the more understandable that the biggest contributions to Japanese inflation and the cost of living crisis there is imported fuel and food. Because if the yen is losing purchasing power relative to other currencies on global markets, well, then it can buy less with each incremental yen of food and fuel. And so, of course, prices in yen terms are going to go up, even if the price of the goods isn't moving. And as we just saw, at least for the food side of the equation, moving it is. Right here. And so this whole story ends up being an interesting reflection of what the Fed may do. Because for the Bank of Japan, they don't just have to consider domestic factors. In fact, much more so, they have to consider what the Fed might do next. And of course, what we've seen is a push toward reflation, both as the U.S. economy has become hotter and as the markets have benchmarked the policies of the now in place Trump administration, like tariffs, like deportations, like tax cuts, like deregulation, all of which have potentially inflationary consequences, both through increasing the cost structure, but for labor and for imported goods, but also in boosting economic growth and thereby ramping up price pressure through economic activity. We likewise see that U.S. economic data has started to surprise on the upside again, looking at the U.S. surprise index. That, of course, means that this pressure on the yen may persist if the Fed is going to slow walk this. So from the Bank of Japan's perspective, they might appreciate some more time to figure out what this means before their next move. And if that means we get a soggier forecast from the BOJ this week, rate hike notwithstanding, well, then the yen may move on that. But in that move, it may likewise telegraph what the world's largest hiking central bank, also its only hiking central bank, thinks about what the Fed will do to its landscape going forward. And tell us a bit more about the overall cost of money globally, which of course has implications for the whole asset universe. And that is Macro Money for today. As ever, we are here right after overtime, Monday through Thursday each week. I'm also on Futures Power Hour this Friday with Chris, back with Victor Jones and Tom Sosnoff for First Call Sundays, writing for the News and Insights portion of tastylive.com and commenting on Twitter and, well, the platform formerly known as, and on Blue Sky at Ilya Spivak. Thanks very much for joining. Macro Money's back tomorrow. Happy trading.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
What happens when two titans of trading come together to harness the power of their prowess? Yes, Let's watch these two dominate this popper shop. Wait a minute, I thought these guys were traders, not contractors. They're putting up a lot of bricks. Well, lucky for us, Tom and TP are better at writing than they are almost anything else. Subscribe to Tasty Live Cherry Bomb to get piping hot takes on the market delivered right to your inbox. Sign up at tastylive.com/newsletters.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast.
Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Looking for a better broker and a bonus? Sweet. Get up to $4,000 when you open and fund a Tasty Trade account. Plus, smart tech and a broker who's got your back at Tasty Trade. Make your move, genius. Tasty Trade.
All right, we're back. Tasty Crypto Show. I need to add a little bit more energy to that. Tasty Crypto Show. I'm Ryan Grace. With me today, Shelly Van. This is double duty, I guess. Overtime, working a double shift here on the network. You were on Options Trading Concepts Live earlier today.
That was fun.
Yeah, I enjoy going on that show. Not that this isn't fun, but it's a good time.
Yeah.
Well, it's not Monday. Normally, I'm on there on Monday. You were on there this morning. A lot going on in crypto that we're going to talk about.
So much.
But before we do, Shelly, we got to shout out the chat here. And if you're not on YouTube streaming this, I don't know what you're doing. Get over to YouTube. You can pop out the chat, type in something crazy. What's up, chat? We got John Dominguez in here, Lone Sophos, Big Deal Donuts. What's up? And yeah, I think that's about it for now. So we got 3 people in the chat, Shelly.
3 people. Come on, friends.
Right? Were you not promoting this earlier today?
Sorry, I didn't do my job.
The hell? All right, we have a question for the chat. I just finished eating some treats. Yeah, I do that. I want to know what everyone's favorite candy is, or treat, I guess. It doesn't have to be candy.
Okay.
It could be baked goods or some sort of sweet. I don't know. But yeah.
Oh, look at 4, 5. We've got.
Oh, hell yeah. We're growing by the second.
They were just quiet lurkers.
Yeah. How you been, by the way?
Me, I'm doing all right. I'm recovering from a very long crypto weekend.
Okay.
I was deep in the trenches. It was fun. It was intense.
Yeah.
Yeah.
Do you think this persists?
For my own sanity's sake, I hope not.
Yeah.
But I mean, I think we're all human, right? We can't stay this intense for this long without like a breaking point.
Yeah, but we got, a new environment to participate within, I suppose. It's noticeable, I suppose. You go from, let's just call it for what it is. You didn't see much of Joe Biden. You're going to see Trump every second. We're going from one end of the spectrum to the other extreme.
Yeah.
And trading this during his prior term, it wasn't quite 24/7. But yeah, you had to be ready for a 5 a.m. tweet about tariffs on China that could send the S&P futures a lot lower at times, typically when the market wasn't open. Now, clearly Trump is fixated on crypto. We're going to talk about that quite a bit. 24/7 market. He's back on X. I think you're going to see more volatility. It will keep you on your toes. But I don't necessarily think it's a bad thing. It's just somewhat exhausting.
Somewhat, yeah.
So let's
some ice cream lovers.
Oh, hell yeah. That's a good treat.
That is a good treat.
Yeah. What's your favorite ice cream?
Ooh.
You like ice cream? Okay. I don't think I've ever had pistachio.
What?
No.
Oh my gosh. You got to get like a good, like Haagen-Dazs, like the small, good quality pint.
Okay.
Game changer.
To me, it seems like peanut ice cream,
No,
which
no.
I like chocolate peanut butter cup, whatever, but peanut ice cream with little chunks of peanuts in it, it's not like that? No. Okay. I'll give it a shot.
You got to. We need like a full report by Monday.
All right, fair enough. I'll have some pistachio ice cream this weekend. Shelley, let's just get into it. You said you were up all weekend. I'm assuming it's because of some of the volatility that we've seen in the market. We can cover performance here, though. You know, you look at the screen, you're down. I've got Bitcoin down about $2,000, $1,782 right now, a little bit under 2%. Doesn't really feel like it's been moving very much, given how much it has moved over the past couple of days. So let's talk about it. You're in Trump. What's going on?
I'm not currently in
Okay.
Trump.
You made some money, though.
I did.
Beautiful.
Thankfully, very grateful. I earned every penny by staring at that chart. And some of the friends in chat were with me on this journey. Rustan, Dino,
Okay.
a few. I think Dr. Drip might be around, but my DGen friends are here. Thank you for your moral support always. Yeah, on Friday, we were just sitting around kind of spitballing on like, what's the move? The inauguration's happening on Monday. What are we doing? And then that tweet goes out. And we were all trying to get in Trump at launch.
So you were already looking out for this. You're a real trader.
Kinda, sometimes. Because to be fair, I think it was Dino who was like, hey, you should pay attention. And I was like, do I have to? I'm so tired. I just want to tap out. But it was like, nope, sucked back in. And so I got in around $8, out at 13, back in at 16. And so it was just one of those nights where you were like, what are we doing? What's happening? There were moments where it was like, is this a scam? Is this real?
Oh, of course. I mean,
And
Trump launched a token on the Solana network. I think that's the first question a lot of people are asking, right? Is it real?
is this real life? And we're watching it just go up and up and up. And how does one sleep
Yeah.
when you've got money in now and it's just, and then the little dip, your heart drops. Okay, I'm out. And then you're like, oh God, it's going back up. I'm back in.
So I'm trying to find a chart that'll give us enough data because you've recently had this token listed on some centralized exchanges. I know it's on Coinbase now. It's on Binance. Looks like there's some perps that you can trade as well. Just trying to get a price. Okay, here we go. This is going to give us a little bit of a sense of where we started at because you can see we traded all the way up to about $80 or so. Currently at 38. Started in the single digits. It was obviously lower than this. A lot of people have seen this. You see the reports of, okay, this guy put $1 million into it. Clearly, you know, somebody knows something. They always do. And they turned it into 100 million, I guess, on paper. You know, you see those kind of headlines. It's never true in terms of how it works, right? You have to sell it. And maybe you got out. But a lot of people are questioning, like, how do you even find out about this? And then we'll get into how to actually trade it. Again, it's now on centralized exchanges, but can you walk everybody through? I know you said you're kind of aware of maybe there's going to be something that pops off around the inauguration, but yeah, like how do people find out about these things?
I mean, in this case, I think it really was Twitter.
Okay. So still, that's the source.
Yeah. And
of truth.
And he tweeted it. So that was what really, because we were watching.
So this came initially from the official account.
Yeah. And
Okay.
if we were looking at things on Dex Tools and just sort of keeping our eye on what was moving, and there have been Trump tokens. You know, this is the one thing about crypto that you have to be careful. Just
Yeah, you've got like the MAGA token. I've seen that there's a Trump token on Ethereum. That's not the same one that we're talking about here.
correct. Like know the contract address, the specific, this is like GIPN off memory, if I think the last four. So if you're looking at a program like Dex Tools or where you can see the contract address, make sure it's the right one because the tickers are not unique always. So yeah, we just happened to jump in, see that it was happening, and lots of failed transactions trying to get in.
Okay.
So it was all very exciting. And I forgot the question already. That's what.
Well, just how do you find out about this where it's not something that's promoted ahead of time? You didn't know that on this date at this time this token's going to drop. I believe that most of the people that were at the crypto ball ahead of the inauguration had no idea either. So all of these big players in the crypto industry, people maybe close to Trump, they're all there and no one has any clue. I'm assuming Trump knew that this was being launched. But it goes out, it hits the internet, really. And I think when I was looking at it earlier today at the current price of about $38, $40 or so, the fully diluted value is about $40 billion, whereas the current market cap is $8 billion. A lot of tokens are obviously locked up. Reports that Trump's organizations, these companies behind this, hold or own about 80% of the supply. So you need to be aware of that, but that is something that's known. And yeah, here we are. Do you think this is a good thing for crypto?
I can see both sides
Okay.
of that argument, with a lot of people are now playing. They're in the game. They're engaged. They're, the crypto curious maybe finally took that step to dive in and engage on chain for the first time. Awesome. So we've onboarded new people. That's always good, right? Except if this left such a bad taste in their mouth that they're like, that was awful, I lost all my money, or my transactions failed and I don't get it, it's a scam, it doesn't work. So it's one of those things. The other thing to consider too is these whales that came in and I was watching the transactions come through on DEX tools like obsessively, and huge money bags were moving through. $800,000 order come through, $300,000. Big money was moving through this thing. So if those were the people that made big bags, where are they putting those bags now? Did they just take that away from the crypto industry and now they're going to go buy a boat? Or are they now on chain thinking, I'm going to reinvest this in other projects that have been building for years?
Right.
So I think we'll see.
Yeah, that's a good point, because quite often you just see in this space money sloshed around. Certainly with the ETFs, with Bitcoin ETFs and Ethereum to some extent, there's new money that's coming into the space. But just given, and this was kind of my arguments against some people that thought that, this is just going to be a scam and it's going to hurt the little guy. And it's like, okay, well, let's take a step back for a second. What you're talking about is a little guy that would have had to have been sophisticated enough, like yourself, not saying that you're a little guy, but would have been sophisticated enough to be able to, one, be on the lookout for this, but then also had a self-custody wallet. They had to connect to it, a centralized exchange with significant assets on chain, given what you're already talking about. People moving around $800,000 to buy the Trump token probably isn't their first rodeo, but that's what it took to get into this to start with. So that's my argument against that this is just a fraud and a scam. I don't at all think that's what it is. I think it's probably a surprise to everybody what happened, how quickly it happened. We know that Trump has released, I think it was like some NFTs, a variety of different NFTs, some sneakers. They're doing
Bibles.
Things in the crypto space.
It's all over the place.
World Liberty Financial. So this is definitely not the first time. I just think that the magnitude of it and the timing is what caught people off guard. I don't necessarily think it's a scam. It's no more of a scam than AMC or GME or any other company that, as they reached new highs, also came out and issued hundreds of millions of dollars in new shares. Mm-hmm. And people gobbled that up and told themselves that that was a good thing. And I can remember there was a point in time where the narrative on Twitter, and this would have been back around COVID, Hertz, if you recall, filed for bankruptcy. And that was like a positive thing for this. People thought that was a good thing for the stock. And so I don't think this is anything new. There never is. But again, definitely caught everybody off guard. I'm still kind of split as to whether it's a good thing or not for crypto. I think it is, long term, what we're seeing.
Well, and it was interesting for him to, and I say him, whoever's doing this, they used meme coin. This isn't, the Trump token. It is a meme coin. Culturally, that in itself is sort of significant. And have you gone to the website?
No,
His landing
not
page?
yet. No.
It's very in your face. Like, this is for fun. Like, have fun is what he's saying. So for anybody that put money that they couldn't afford to lose in, that was a bad idea, if
Absolutely. But that goes
to any memes.
Exactly.
We have that on our bag battles disclosures. Like, be prepared to lose it all. We're just being degens.
Fart coin.
Fart coin.
Let's jump over to the slides. I want to look at just the impact on adoption and talk about some of the other things that we saw on chain, just to, I guess, debrief in some case. But you put this together earlier for Options Trading Concepts Live. If you want to just walk us through, like, kind of what are some of the things that you saw, your experience when you were trading this? You're on the front lines, seeing $800,000 orders come through. You're up all night. Like, how are you thinking about this, and kind of what else did you notice here?
Well, what was interesting is Moonshot, the wallet that Trump used to launch this thing. You could pay with Apple Pay. So it wasn't
For the normies.
For the normies, exactly. It wasn't as native as other things that I've run into or, not been prepared for. Like, I don't have the correct wallet for whatever I want really badly, and it's selling so fast. So there's this, like, panic. This was like, oh, I'm prepared because I already have my wallets and I could access the exchanges. But for anybody that signed up with Moonshot, I don't know how quick or how...
Okay, so in that case, I guess you didn't necessarily have everything I said. I got to walk that back, because you could have just come in and give me 100 Trump with my credit card here.
I think they have KYC that has to be set up.
Okay.
So depending on how...
But easy enough that
Yeah.
you could do this. You didn't have to be super sophisticated.
Exactly. So that was an interesting pivot. If for the crypto natives that didn't have liquidity in their non-custodial wallet, getting your money into your wallet if you use Coinbase, well, there was a little hiccup there because Coinbase was not ready for the influx of all this traffic. And that's a screenshot from my phone with the transaction time it was going to take to move Solana over, or to move any funds on Solana.
Okay, so this wasn't congestion necessarily on the Solana network. This was just Coinbase processing these transactions.
Which was confirmed later, because at the time we were thinking, oh my gosh, Trump broke the blockchain.
Yeah.
Solana in this case. Later, Coinbase did say, like, that was us. We weren't prepared for this level internally. So they're now working on their own scaling solutions.
Well, that's wild. I mean, that speaks to how big this really is then. It's reminiscent of going back to the COVID period, the meme stocks, GameStop and Robinhood turning off the buy functionality because of settlement purposes. It just was too big.
Yeah.
A lot of people think there's some conspiracy there. Not really. You can build scalable systems, but sometimes they reach their limits.
Yeah.
And you have to fix them. And I think they get bigger and better over time.
I mean, we still have to expand highways and physically make more lanes on the road. That's just the way it happens.
Well, I think we were talking the other day, or maybe it was yesterday morning, and I can remember when, like, 2FA, this is, like, I don't know, back in 2015, 16, I don't know. It was, maybe it wasn't that long ago, 2017. Anyways, I can remember when I couldn't log into my Coinbase account for well over a month because 2FA wasn't working for me. So growing pains,
Growing pains.
It's all part of the process. I still think it's kind of like I've said, 1995, mid-90s. If you compare this to the internet, a lot of people have, in terms of where we are. So it'll get better. But this is not like the final state.
Right. Right.
So a lot of new users because Donald Trump has quite the following. Solana, if we jump over to the next slide here, you can see the network, in some ways, I suppose, benefited from this. I mean, the price of Solana just ripped higher. We got up to maybe 280 or so, if I recall correctly.
Close to that, if not.
Yeah, pretty much. And then we've dipped all the way back down to 228 and recovered back up to 262. So a lot of volatility around. But yeah, I tend to think that, because for a lot of people, right, you even talk to people around the office here, it's like, oh, I'm going to go launch my own token. Well, yeah, actually you can. Mm-hmm. That's what this technology allows for. This is a use case. Talked about meme tokens or meme coins, on the show quite a bit. And there are, I think, hundreds of thousands, right? But there's only a few that people actually care about.
Sure.
And so, again, I don't think it's a scam, and I don't think you can look at this as like, oh, anybody can do this, and he's just going to rug people. That would be bizarre. I mean, again, like, it's not out of the realm of possibilities, but it would be bizarre.
Yeah.
If that was like, the purpose of this token is to defraud people. Maybe. I just think, again, that this is quite unexpected. And, we've been in this space for a long time. We know that insane shit can happen. And it doesn't always stay there. So, yeah, it can go to 100 billion fully diluted and back to 10.
Yeah.
Right? Buy the ticket, take the ride, I suppose. But yeah, I don't think it's a bad thing. I know it's probably rubs a lot of people the wrong way. It was very quick. Again, I think we're going to have to get used to the news flow is going to pick up here a bit. But it just speaks to what's happening on chain, where you have, in this case, I don't necessarily think that this was launched for the purpose of capital formation, but that's a use case of this technology. I think that's a use case of meme coins. And I believe that you're going to see not just celebrities, not just people like Donald Trump, but brands and, let's say, sports teams. Obviously there's communities and there's projects that have tokens as well, or meme coins that have launched. I just think you're going to continue to see that. Let the market sort it out.
Right.
I
mean, a lot of celebrities have launched their tokens. And I think, and I don't speak for crypto at large, but from my experience, I think the sentiment in this industry, we're not impressed by celebrity all the time.
Right.
It's kind of
right.
like, that's what we're trying to, stick it to the man, ape strong together. Like, the little guy revolution is going to come up and have more of a voice. So when it comes to like, a celebrity's launching a token, it's like, crypto wants to make money, so they'll ride it. But overall, it's like, that's not the end all be all of like, this is what's going to make crypto big.
Exactly.
So I think, yeah, we'll see what happens. But I mean, as a degen, I will absolutely be playing the game. But my real investments, my long-term holds, are legitimate crypto projects that are building really cool stuff on chain.
Absolutely. Well, and I think that's the way that you've got to look at it. I suppose from my perspective, and maybe, obviously you've been building in this space for a long time as well, but in the more regulated areas, you think about brokerages, centralized exchanges, just the difficulty everybody's had with the SEC. Objectively speaking, and we've talked about this, but love him or hate him, the President of the United States launched a token on the Solana blockchain. Changes everything. Mm-hmm. And I think that's exciting. It, to me, signals that as a country, we're going to embrace this technology. We're going in a completely different direction than we were in before as it relates to this. Also, you're seeing the SEC and a complete 180 as well with the task force that's recently been established. I know you talked about that this morning as well. Any quick thoughts there?
I'm just so excited.
It's happening quickly.
Yeah, I'm thrilled that, I don't know Hester Pierce personally, but just from a quick scan of what she's done in life, I'm like, oh, cool, a reasonable person.
Yeah, she's pro-crypto, sensible.
Yeah, like, hey, we want rules, we want regulation, tell us what we can and can't do, and then let's go do it. She's very pro-innovation, but also, like, pro-guidelines, too. Like, let's just set the boundaries and let's go.
Yeah, it's only January 22nd. We're only, 2 days in to this new term. But I'm excited in terms of, certainly what's happening in the crypto space, and the support of the U.S. government is, I think, is, certainly welcomed, put it in that, to put it that way. Shelly, really quickly before we wrap up, just want to take a quick look at where we are. A little bit of a bounce from probably this time last week when we sent out our email on the market update. But no real change when I look at volatility. The expected moves, while the ranges are higher, so a series of higher highs, higher lows, the magnitude of these moves that is being priced in terms of implied volatility is still about where it's been. Implied vols, and you can see realized vols here for Bitcoin as well. Bitcoin's realized vol on a 30-day basis, if you analyze that, is 46% implied in terms of what the market or the options market is pricing in. 62% hasn't really changed very much. When that does start to change, and certainly if you were to see it really move to the upside, I think you've got to pay attention to that signal. But for now, the Bitcoin expected move over the next week, and it's going to change as the spot price and vol changes. But this snapshot at this moment in time is pricing in about a $9,000 range, 95 to the downside, 113 to the upside. That'd be a new all-time high. ETH, not a new all-time high there. That's lagged quite a bit for a variety of reasons here. I don't think it will forever, but still looking for a $300 move. Not anything that we haven't seen before. Solana, some real serious outperformance there. You're looking for a move almost up to 300 if this continues at these volatility levels, which I think is about 95% or so. 95% there in terms of the realized vol on a 30-day basis. So it's pretty bullish at the moment. That could all change instantly, as we know. But definitely looking a lot better than we were a week ago. We dipped down below 90 in Bitcoin, and a lot better than we were looking kind of as we wrapped up the year heading into January. So it's been a good couple of weeks here. Excuse me.
Yeah. Bringing it back to the beginning, what's your favorite snack or treat?
This is an extremely difficult question.
What was your question?
I love treats. Man, over the weekend, I almost crushed an entire thing of. Have you had these Nerds clusters?
Oh my gosh!
And I saw something too that they're like made out of bugs.
They're like the worst for you. My degree is in nutrition science. You can't throw Nerd clusters at me. I know too much.
They're so good.
They're horrible. They might be good. And you know, it's funny. I did notice, because I was perusing the aisles at Target during the lockdowns. Those were selling out all the time.
Not surprised.
Like, what's going on with
those? They're delicious.
They must be. Okay.
Yeah. The only thing that could make them better, like my critique, I don't know if the Nerds representatives are listening or not. It's like if you haven't had it, it's like this little gummy, but it's covered in Nerds. Okay, so you get this nice crunch, and you get this little chewy action afterwards.
Game, yeah.
I just think if it was like a gusher, you know, and there was this like liquid sugar inside of it, that would be like another version that I would probably purchase. You know, it's like there's Sour Patch Kids, then there's the watermelon ones, or there's the tropical flavors. Give me the Nerds clusters with, man, this is getting weird, with the goo. I don't know. I don't know. We've run out of time. It's a good thing. Shelly, thank you for coming on the show. Everybody in the chat, thanks for showing up. Good to see you, and good to see that you're bringing everybody.
The fam is here.
To the
Thank
network,
you for being here.
Which is awesome. So shout out to Dr. Drip, Dav, Laura, Lone Sophos, everybody up in here. We got more content coming soon. We'll talk about that probably over the next week or so. Be on the lookout for the Tasty Crypto email. More in there. Trying to put out more emails. We're going to do more shows. We've got more live streams coming. So I'm excited.
I'm very excited.
And it's still pretty bullish for now, but we'll let you know when that changes too. That's going to do it for our show. We will be back. What is it? It's Wednesday. So we'll be back on Monday next week. Man, forever away. Until then, I'm Ryan.
I'm Shelly.
Peace.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building. The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back? But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast.
Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bet.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, $4,000. Get on the platform for traders who just want to trade. Tasty Trade. Make your move. Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options. In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options.
Yeah, it is Wednesday, January 22nd, or so they say in the Gregorian calendar, a little bit after 5 p.m. Central Time, the best time. You know what that means? It's time for Tasty Live's evening show, a little podcast, a little podcast called The Price of Truth, a show where we like to explore the incentives that govern our world. It is Wacky Wednesday, folks, and you know what that means for all of 2025. God willing, it means we'll be joined by Christopher Vecchio. Chris, how are you, my friend?
I am doing well. It's a good day, Victor. Come on, stocks are up. What can you complain about?
It is a good day. We were just sort of exchanging our rap sheets in the green room before we came on air. I told you some of my dirty secrets, but you didn't tell me any of yours. So tell me, what's the worst crime you've ever gotten away with?
Well, after those stories of human trafficking and animal torture, I don't have any story that stacks up, Victor.
They didn't know that, though. So you're comparing this on a relative basis to something the audience never heard. Shout out. Somehow that's the cold open. Starting with bestiality. Shout out to everybody watching on tastylive.com. Shout out to everybody.
Start again.
Hello. Welcome, everybody. Shout out to everybody watching on Tasty Trade desktop and mobile application. Everyone's like, what were they talking about? Tasty Trade desktop and mobile applications. By the way, Chris, do you have a New Year's resolution? I didn't ask you this before.
Exercise 5 to 6 days a week, as opposed to my 1 to 2. You strike me as a limber guy. Would you say you're a limber? Would you self-describe yourself as limber? I was a rower, so having a wide range of motion was important. Our coach put us through Bikram yoga once every 2 weeks to make sure that we were, loose. So I retained that flexibility.
I pegged Ilya, when I said I could kind of guess what you do when you go work out. I was like, I don't think you touch the weights. I don't think you touch a free weight, a bench, a squat. I see you as a guy in sort of a full matching sweatsuit or velour tracksuit in the corner of a weight room with a medicine ball doing pure calisthenics, and I nailed it. With you, I see you, if I walk into a gym, I see you perhaps I see you folding yourself up into a pretzel on sort of the mats off to the side. There's the treadmill area, then there's the workout area, there's the machines, and then there's usually a mat. And I see you in a human pretzel off on the side on the mat. How close am I? 1 to 10, 10 being nailed it.
0. You'll find me on a 60-minute Peloton interval section or with lifting weights, but not. Unfortunately, I'm not Chris Pretzel Vecchio around these parts.
That's going to stick. You shouldn't have said that. The reason I ask is if any of you out there are new year, new me type people, you owe it to yourself to treat yourself with the Tasty Trade desktop and mobile application as you build yourself a newer and better you. If you don't have it, go get it. That is my, I suppose it's semi-paid advertising to start off the show. So let's get into
that or more nicotine, but we don't have any nicotine sponsors, so we'll just.
We should just start doing ads for nicotine companies, unpaid nicotine spots.
And
Like
then,
Zen.
it's kind of like if
where's
you
our
build
check?
it. Yeah, if you build it, they will come. I feel like if every day we just start doing nicotine ads, somebody's going to pay us eventually.
So all right, here's the plan. We buy a bunch of Altria stock.
Okay. I like it already.
We have Juuls, Nicoderm, because you got to play both sides of it, right? Zyn, and I'm sure one of them, if we do all those on air simultaneously, someone will give us a sonssorship. So next time, come, a Marlboro Red as well. Just throwback. This is Trump's America now.
So we're going to be patched up, zinned up, gummed up, and also smoking a cigarette.
It's the American way.
We're either going to get a sponsorship or a one-way trip to the hospital. But I think either one of those cases, we're going to get more views. So it's worth a try. I volunteer you. Shout out to everybody watching in the chat over there on the YouTube. I used to say soon to be reformed YouTube, but after watching that inauguration and seeing the new world order assemble behind the President Trump, I was like, I don't think much is going to change. I don't think Google's going to change much. But anyways, shout out to everybody watching in the chat. I would shout you all out. I'll just do a few. Victoria, Lone, Rezo, Big Deal, Steve, Grumpy Mike, and all the rest of you crazy lunatics in here who happen to, stop in. Lone, VW. I see all you guys. Great to see all of you. Thank you for spending an hour to 90 minutes with us every single day. All right, Chris Vecchio, we'll start off with price action because that's what we're mandated. We'll go into more spicy topics here in just a bit. S&P 500 for the second day in a row, up about 60 basis points, which is about what they did yesterday. NASDAQ, not the laggard, the leader today. They liked large cap growth as a style factor preference today. The NASDAQ was up 1.3%. The Dow Jones up 30 basis points. And the Russell, I'm talking cash, my babies, not futures, down about 2/3 of 1 basis point, reversing yesterday's outperformance, is the laggard here today. I am curious, my good friend, what say you about not just today's price action, but what we've seen for really this week, and whether this is an emphatic movement outside of sort of the sideways chop that you had envisioned, or whether you just think this is a movement towards the upside and we'll likely continue to see two-way sloppy action going forward. What say you, Chris Vecchio?
It feels like the market's trying to press a breakout right now. This catalyst that we have with the Stargate project seems materially important because it's a lot more spending than we thought would be taking place over the next few years. And I think if we look at the performance of the semiconductor stocks, it is pretty clear that people are excited about this. NVIDIA is quickly moving back up towards all-time highs. SMH is at the highest levels that we've seen in several months, at a three-month high going back to July as well. So everything's kind of coming together on that front. And, I think there's something more psychologically important about this AI investment, which is that it was touted yesterday that was going to be infrastructure day for the Trump administration. And, my first reaction, as I saw many people on Twitter, not just Democrats or center-left people, but people across the spectrum go, oh, it's infrastructure week again already. Mm-hmm. But then later that afternoon, there was actually a significant infrastructure announcement. Mm-hmm. It may not be like the bridges and roads kind of infrastructure that we think of, but for markets,
come on.
$500 billion
who needs functioning, safe public transportation? Give me
not where we're going.
I know what you guys need. You don't want buses in New York City, okay? You don't want safer trains. Get out of here. You don't want functioning, whatever. You don't want functioning infrastructure. You know what you guys want? You need more data centers. You need data centers.
You need data centers, and you look at some of the top performing companies last year, energy companies, CEG, VST, EXC, ET, right? I'm just naming off some power companies that I may have taken positions in today, as we talked about on Futures Power Hour and Overtime.
They got cheaper.
Some of them got cheaper. But you're looking at a market that clearly is saying, okay, there's a lot of demand for AI and there's a bottleneck here, and we're going to have government resources supporting the development of this industry.
maybe we're underpriced. And I would point out that this investment is really for OpenAI. It's not an investment that's going to help Meta's AI infrastructure. So if Meta wants to keep up, that's a lot of money that needs to be deployed into the space. So a lot of demand, both in the picks and shovels part of this, getting the actual GPUs in place, the hardware in place, that has new life. But we're also thinking down the line, now that all these data centers are going to be built, what happens to the grid and demand for electricity? So there's a lot to like there. If you are a tech person, if you've been long the NASDAQ, I still have some legacy exposure from the end of last year. So if this wants to run up to like 22,500 real quick, I'd really appreciate it. Other than that, Victor, yesterday with the S&P breaking out, I added some 6150 calls. And I think with the 6150 calls, the 6150, 6300 call spreads in ES, still 44 days to go on those. I'm feeling pretty good right now. And I don't think
that's aggressive for you. You typically buy deeper out of the money. So 6150 it must mean either it's a much shorter term expiration or daddy's got a hunch. Which one of the two is it?
Just have a feeling. Last week when we were talking, I believe we had a discussion about the sector rotation. I know I've been mentioning it a lot, so perhaps it wasn't here on air. But you looked at the banks, you looked at semis, you looked at discretionary, all breaking out technically speaking. And those are the kind of things that lead bull markets. So feeling like the sector rotation is in the right place right now. The leader group is leading as it should. I never like when healthcare is the leader group. That doesn't make sense to me. That's a defensive name. So when you see those names leading, you kind of feel good about things. And, the fact of the matter is, like, let's be real, this isn't Trump's economy right now. This is still Biden's economy. In 2017, Trump doesn't get his first bill passed, right? And it's different this time around because they're doing so many executive orders. But Trump doesn't get his first bill passed that really impacts fiscal trajectory until the fall that year. And so the 2017 economy that you have is largely remnants of whatever policies that Obama had in place, because the fiscal policy hadn't changed at that point in time. There may have been someone different in the White House, but where the money was being allocated by Congress, that was still on that spending path. And we're still on that spending path right now. So Trump's doing these executive orders. A lot of them are unpopular. Some of them drill baby drill, or the AI related, or the reclassification of the U.S. digital service into Doge, for example. These things related to the market, I think, point to a near-term path higher. And we still have a 4 handle on the unemployment rate, a 2 handle on inflation, an economy growing to between 2 and 3% real terms, and double-digit earnings growth. That's a Goldilocks type of market for stocks. Volatility is what? Nothing right now? 15 handle on the VIX. Mm-hmm. So, yeah, it feels right. The market can squeeze a little bit up here in the short term. SPX cash hit a new all-time high today. ES futures did not. NASDAQ futures did not. But you're starting to see the turn. So might as well ride the wave, Victor.
I can't argue. I can't argue much with that, other than the price and valuation point of view. But I think I think that's why you search for areas that have already been beaten down, or where you'll have some sort of like valuation cushion. So I think coming into the year, and I think you agreed with this, coming into the year, I had said at the end of the year, I did a show at the end of the year, my most loved themes coming into this year were energy, healthcare. I want to say the others, but those were two. And the reason for that is they had been beaten up significantly already, mostly because of sort of policy anticipation on additional oil and energy supply for U.S. energy companies. And so you saw depressed energy stocks, and same thing for healthcare companies, given the potential confirmation appointment of RFK Jr. at the Secretary of HHS and the likely sort of impact of future earnings to a lot of these healthcare companies. That had already been priced in. So I thought, if you're going to buy something here at these levels, why not buy something that's probably been beaten up over the last couple of months? I'm just talking price, not necessarily valuation. So I see the world through the same lens. I think it's hard to go outright short deltas here. I think we're stretched. We're not like crazy stretched. But yeah, I think to me, do I want to put an incremental dollar towards Nvidia? Maybe not. But then I look crazy on days like today where they're up 3 or 4% in a day, right? So it is what it is.
Yeah, a few weeks ago, it's in the tastylive follow page. Well, a few weeks ago, I guess it was a week ago. Got long the Nvidia 155 call, short the 160. So there's 30 days to expiration on that right now. Likewise, my exposure in SMH is for the long 260, short 270 call spread. That's also 30 days to expiration. I think these are still going up, right? I was asked the question earlier, would you close those out today now that you have some, change in your pocket? SMH is, I could close that out for basically $208. And nice small win for a week of trading. Happy to do that position by position as a retail trader. But no, it looks like it's going higher and we have a new tailwind. So who's to say that this is going to be the top? And I know that's an argument I've made for a year plus now. But with SMH in particular, something happened this week that we haven't seen for a long time. We hit a new 3-month high in SMH while we hit a new 3-month low in IVR. The last time that both of those things occurred in the same 5-day trading window was November 2023. And so I think, if I recall correctly, November 2023 was a pretty darn good time to get long semiconductors. So if the near-term impulse right now is for a market that's gearing up and showing the sector rotation that's early stage bull market, I'm going to want to stay long the high beta stuff, at least right now.
Early stage bull market. If that's true, good God, where's this thing going? But at the same time, where are interest rates going? You know what I mean? If we're early stage bull market and nobody's pulling the reins on the long end of the curve, and the more growth we have, and the Fed's just going to let inflation run at 2.5%, as they said in their last summary of economic projections here. Good God, where's this thing going? And where's the long end going?
We're not getting the tariffs to the degree that people fear, then maybe the long end is just going to be stuck and go nowhere for the foreseeable future.
Why do you say that?
I think that we had so let me just work backwards from my worldview. Trump's a lame duck insofar as he's not going to run for a third term. I know there's talk where they do it. No, you're not going to get the ratification by the states by then. So just ignore that noise. Let's talk about the reality. He has a 2-year window. He has a 2-year window with a GOP trifecta. Having that GOP trifecta in the second half of this term is by no means guaranteed. It's also a very thin GOP trifecta. So if Trump's going to do things and he wants to effectuate change, he's going to do it early. He's going to do it quickly. That's why we've had all these executive orders come into play since Monday, right? He's trying to get this stuff done, use his power as quickly as possible. All this stuff was queued up, and now he's acting on it. Whether or not Congress is able to deliver him the tax plan that he wants, because I know, like, for example, my congressman, Mike Lawler here, a Republican, is adamant about getting the state and local tax deduction restored, which I would happen to agree with as someone living in a very high tax blue state, right? So if you have one Republican in New York, which there are more than one Republican, particularly those Republicans on Long Island who also feel this way, that SALT should be restored, then you can't get the tax plan passed in the manner that it has to be done. You can't simply get an extension. So if Trump's going to do things, he's going to do it via EO. He's going to do it very, very, very quickly. And if he doesn't do it quickly, then there's clearly a desire to not effectuate change per se, but to get to somewhere through negotiation. So the tariffs having like, oh, we made you this on February 1st. Well, it's not instantaneous. It's buying you some time. It's clearly a negotiating tool. Will they go into effect? Probably. But we know they're going into effect under the framework of there's gaps being given to try to reshape a trade agreement, if you will. And so the market sees it as more deliberate rather than ham-fisted. He's not throwing the baby out with the bathwater right away. It's not a 25% tariff across the bow for all countries, full stop. If we go there, that could be problematic. But right now, the signaling, at least the writing on the wall, isn't that we are heading there in the short term. And if we're not going there in the short term, no wonder those Fed cut odds have bumped back up. I don't know if you noticed this, Victor, 2 weeks ago, pre-CPI, talking about maybe one cut over the next 2 years. And that was like priced to a 45% chance. We're now back to 2 cuts priced in for 2025. Yep. So the market sees a lower likelihood of disruptive tariffs moving forward. And even Jamie Dimon's out today saying that they may be a little inflationary, but people should get over it, which I don't know if that's the
It's
right
in the best
messaging.
interest of net. I think it is. I don't think the bond market is as scared as of tariffs as people think.
Because it looks less
there's an
unwieldy now.
What's that?
Right? It looks less unwieldy now. It looks like it's being done with precision.
I mean,
Grace.
maybe, but I think it's weird. It's being done in a weird way. Well, okay.
Why do you think it's weird?
Because it's Canada, Mexico, China, and no one else, right? Isn't that it? Canada,
So
Mexico,
far.
China, and no one else.
He said
So
the
it's
European
sort of
Union is
like,
getting theirs.
yeah, it's like.
I think that's a direct quote.
Is it really? So I it's sort of an interesting. If you told me what are the groups you're going to go after first with tariffs, I don't know that I would have said those are the groups. But I get that a lot of those have strategic importance to the promises made to the constituency, to the base, with drugs, crime, and immigration. But it's, like long-term strategically sort of a bit of an oddball bunch. That's number one. And the second thing is, you mentioned the EOs. I sort of like, starting with the Obama administration, it seems like we started to govern by executive order more and more and more. For good reason, right? Things were locked up. How do you get stuff done? But maybe in a certain way, that's why things are constructed the way that they're constructed. And I wonder if what we're seeing over the last 3 administrations really is going to be more volatile society, more volatile governance, because all of the things that are getting passed aren't getting passed through legislation. They're getting done through EOs, which then just get reversed on the next president, and a new set of EOs get implemented. And so there's like, that whole idea of, Congress and especially the Senate sort of being what do they call it? The cooling, I don't know what they call it, but sort of like the long-term thinkers, and implementing things for the long term. And not necessarily for short-term political gain. It seems like that's been thrown out of the window, and we're governing 2 to 4 years at a time.
That feels true. It's also not true.
What do you mean?
Joe Biden had 115 executive orders. Donald Trump had 220. Obama had 276. George W. Bush had 291. Bill Clinton had 364. Ronald Reagan had 381. Nixon had 346. Eisenhower had 44. Truman had 907. FDR had 3,721. Herbert Hoover had 968. Calvin Coolidge, who was a do-nothing president, as people point out, he had 1,203. Executive orders actually have become less popular as time has gone on. During the late 19th century, early 20th century, they were really, really popular. FDR is a unique occurrence, of course, because of the Great Depression and World War II. And then ultimately, people saw him as having such unchecked power in the office that they passed a constitutional amendment such that you can't run for a 3rd term, because he would have kept running had he not died. But the point is, it feels like that we have a lot of gridlock these days and that everything is being done by executive fiat, when in reality, that's not the case. It almost feels like we're not getting the significant issues addressed. And so we're trying to do them through executive orders now, as opposed to congressional mandate, right? A bunch of these executive orders for things like, they're mostly historically lots of nothings. Small things about the federal bureaucracy that don't impact everyday people's lives. Now we have executive orders about the border, right? Now we have executive orders about what genders are being recognized, and Title VII and Title IX, and the Lyndon B. Johnson executive order that we talked about on the last call in overtime, 11246, which addresses, the federal distribution of funding for companies depending upon whether or not they discriminate within their own labor force. So you're seeing things that are now like happening that almost haven't been addressed in decades because we've checked every other single box through congressional acts. I don't know. The point I'm getting at is we have a lot of gridlock right now. Because we're not seeing legislative achievements, the executive orders come under greater focus. But the reality is that executive orders have been used less now than they were 50 years ago. I don't know if that's a good thing or a bad thing, but those are just the numbers.
I stand corrected. I appreciate that, my friend.
I only know that because I had a discussion with someone earlier today, and so I was like, oh, I just need to open this Word document and pull this back up because I would have never had this up.
Was it on air?
No,
okay.
Unfortunately not. But
all right, let's do this. Let's go quickly through some of the bigger gainers and losers for today, and then I'm curious to get your take once we get to sort of like crude oil and some of those instruments. I'm curious to get your take some of the geopolitical things that have occurred, Trump's quasi-threat to Russia, what he said today about additional sanctions. We haven't really got to talk about the presidential meme coin launch. I'm curious about the pardon of Ross Ulbricht. It's going to be impossible to make that market related, but it's an offshoot of Bitcoin and cryptocurrency, I suppose.
It is.
I know you're passionate about what's been occurring in Doge, so I'm going to give you a little bit of a platform to talk about that. And then, who knows, maybe we'll get to pardons or something like that, crimes against humanity towards the end of the show. For now, let's start with the gainers and losers. And Netflix is on a tear today, up nearly 10% off of their earnings report. Anything in here you find particularly interesting, whether it's from their earnings report or price action? Would you be participating in this thing after jumping from 850 to 1,000? Would you be fading it? I don't think that's something you do very often. I'm just curious, because this is a big mover of the last two sessions, how you're thinking about Netflix, either narrative-wise or price-wise.
I have no idea who is buying Netflix subscriptions. I have seen.
I don't either.
They have thousands of shows that are 1 or 2 seasons. It's very frustrating. Although I suppose today's Wednesday, so The Night Agent season 2 comes out tomorrow night, which is great. Maybe it gets a 3rd season, but that will be fun. They also have 50% of the streaming market, which is, I think, the bigger deal, right? You think about the total customer base of Warner Brothers Discovery. We can go to Disney Plus. Choose another Apple TV, right? Those 3 have the same number of customers as Netflix. People right now are comfortable with their spending. Netflix today's bumping up the price per plan. I know they got a lot of crap from consumers for saying that, hey, you're not letting us share at home now. Well, guess what? They're making a lot more money, so shareholders are pretty happy about that. I don't have any trades on before the earnings, after the earnings. I'm very happy about the subscriber numbers, though, and what it means for consumers generally. They're affording the price increases, and people are taking note that you can still pass on those price increases to consumers, and consumers are not really changing their spending habits. That's good for companies' margins. It's part of the reason why we've seen this double-digit earnings growth, as it were, because incomes, despite all of the noise we've heard, they are going up, and incomes are up in real terms. And just because the White House changed colors doesn't mean that that's going to change. So for all the people who said it wasn't true for the last 2 years, you are now welcome to say the truth. Real incomes are higher. There's positive real wage growth right now. And that's why Netflix can do what it's doing. And that's why the stock market's doing what it's doing. So unpeeling all of that, would I chase this to the upside? I don't know. 50% of a market share seems a lot. I spend most of my time on Amazon Prime, HBO Max, although it's just Max now. I couldn't tell you what I use Netflix for, but my wife seems to use it for every single Korean or German or Finnish murder mystery that's ever been created. So I guess there's an audience.
I don't have any of these things. I don't think I own a single streaming platform. I think
Prime Video comes with your Prime subscription.
I think I canceled Prime when I moved. I don't really order stuff here. I don't really order stuff. Plus the Amazon store, the Amazon offerings here aren't as robust as in the States. It's easier just to go grab it at the store. The only thing I have is like YouTube. Is it Red, the premium subscription, so I don't have to watch ads? That's the only.
And you can minimize it when you want to go to other apps.
I know.
That's literally the only reason why.
You think that's stupid, but that's like when you can do it, it's a game changer.
Do you know
It's
how
such a
often
game changer.
I put you on while I'm like reading something on my phone and I'm like cooking dinner and I can like do other things on my phone while the YouTube is playing, right? So the YouTube. Oh gosh.
You're a psycho. You're a psychopath. You're a psychopath. Only you listen to me. Why would you do that? Why would you listen to me? I'm better audio than video though, for sure.
I have to.
If you told me
for sure.
you watched me, if you told me you watched this show on mute, then I should be more worried.
You'd have to. If I ever say that, please file an HR complaint. That's just too far out there, even for me, Victor. That's a line I will not cross.
If you told me, yeah, all right. I was gonna loop in the human pretzel thing, and then I was like, all right, you know what? All right.
See you later.
Speaking of the themes, I think you and I both loved, or supported coming into the year, just on the fact that a lot of this stuff had been brutalized. I don't love being like a Pfizer shareholder all of a sudden, but I think at some point the price got too attractive. Same thing with, mRNA. I definitely don't want to be an owner of that stuff, but it's super cheap, man. It's super, super cheap. And Moderna was up, 7-something% here today. Some part of me, there was a bird flu sort of announcement the other day, which helped put a little bottom in yesterday, helped to support the market. I also wonder if sort of the announcement yesterday of that infrastructure bill, Larry Ellison of Oracle stood and he started to talk about some of the first applications of some of the data centers and the technology that both Oracle, OpenAI, and I always forget this. What is Masa-san's SoftBank sort of joint venture is going to tackle, and it had everything to do with healthcare, had everything to do with personalized vaccines. Scariest phrase in the world. Personalized vaccines, with being able to sort of analyze your genetic code. I'm not going into that. Genetic code, preemptive pardons.
Take the bait.
I know. We'll get at that. We'll get into that at the end. That way we don't lose everybody or start World War III on the channel. But personalized vaccines, basically being able to analyze people's DNA and then give them sort of this personalized mRNA vaccine. I think that probably had a little bit to do with it as well. So you got like two sort of short-term catalysts for Moderna here, up 7%. What would you do anything with this thing?
I have enough of my bird flu.
You're an Eli Lilly guy, right?
I have been for a number of years. My cost basis is $88 per share, which is kicking me because I was much happier when it was like a 10-bagger as opposed to being a 7-bagger now.
Rich people problems.
Yeah, one of the better. I think I mentioned this before. Like the investing thesis was like, oh, his name checked on Mr. Robot as being a bunch of greedy jerks. Like that's probably a company that makes a lot of money, does not care about anything other than shareholder value. They wake up, the daughter's name is shareholder, the son's name is value, right? Like that's the family that runs the company. And so it's a dumb thesis, but I've had dumber ones, right? Like people on Reddit saying, I want to get short copper, so I go long copper, and it ends up making a bunch of money. I'm not going to, I don't doubt the process at this time, Victor. But yeah, look, Eli Lilly, and I think some of these companies here, one of the executive orders that was just passed relates to Medicare drug pricing. Again, this is the problem with executive fiat. You can do these things as president, tell your DOJ to enforce this or not enforce that, but then the next guy can just come in and wipe it away. And so now the drugs that were supposed to be repriced and negotiated under the pen stroke of the Biden administration, Trump has undone that. So will we see those guaranteed lower prices? Maybe, but not definitely now. So that's going to keep these drug companies feeling fat long term. The RFK overhang is still the bigger issue, right? What is HHS going to do? There was a separate executive order that just came out regarding the dissemination of information from health administrations to the American public, broadly speaking. So if there's a bird flu going around, we will now not hear about it, effective immediately. Like that data is not going to be reported publicly speaking anymore. I think that's an issue, but that probably means that if something were to occur, it's going to hit us like a brick wall. And then these are going to moon overnight when they do. So having a small allocation of some, like, what if things hit the fan for a health emergency? I don't think that's a bad play to keep around, even if you fundamentally disagree with the companies that and what they do. You mentioned mRNA, and we could talk about CRISPR or what have you, but that CRISPR technology and company that RFK supports per his holdings, what have you, mind you, personalized health, if you will, from the new HHS secretary. But I digress. These companies will do very well in that world if things continue to go off the rails. So once you get rid of, look, just to pull this back in, Trump just cozied up with all the big tech guys, right? How much of this is different? How much of this is going to be different? It's just swapping out different elites.
I agree.
We're just swapping out different elites.
But I think that's always the case. I think this is the part where a lot of those strong campaign promises gets walked back. And so I think the fact that Vivek is no longer a part of Doge, I think the fact that I'm getting old. What is her name? Tulsi. The fact that Tulsi had to sort of change her stance on FISA and spying on domestic citizens for national security reasons. I think that the fact that she had to flip her stance on that, likely to aid in her own confirmation. I think, probably RFK Jr. is going to, I just think all of this stuff is going to end up getting negotiated down and away from, all these campaign promises. If you don't see that coming, I think you're probably living in a fantasy land, because politics is negotiation. First is getting elected, and then it's finding what can you actually get done. And I personally think the expectation of damage is probably going to be worse than the reality of damage to healthcare companies. That would be my guess. And so I like the price discount. I don't know if it pays in 6 months. I don't know if it pays in 2 years. But I think I'm probably getting a decent risk reward payoff. I don't necessarily want these companies to win. So in a weird way, this is a reverse emotional hedge. So when I bought Palantir, I figured to myself, if this thing moons, we're in a tech dystopia, and I'm not happy. So I probably want to get paid off for that unhappiness. This is the exact opposite. If these things moon, no, it's probably true. It's probably the same. If these things moon, I'm probably not happy. I probably want to get paid for that unhappiness. And if it doesn't do well, I will be happy, which will offset the financial pain. So I think, to me, this is another emotional hedge bet. You don't want it to win, but if it does, you probably want to get paid off for the misery. That's my story. I'm sticking to it. Yeah. The last one, since I did bring up Palantir real quick, and then we'll move on to some meatier, less objective topics, is Palantir. We talked about this on the stream when it was down to 65, and we were talking about like the strategy for legging into long deltas, and we just happened. I don't know if it was 65, maybe it was the day before. We were pretty close to bottom ticking this, and some person in the chat pointed out that the 46 puts were trading pretty juicy, like $1 or something like that. So we looked at that, and that was interesting enough to catch me. I'm guessing a few people copycatted into that trade. And then a couple days later, those things were trading at nothing, 20 cents. And I'm sure they've collapsed. I'm not in them anymore. But at 77, 5% rally here today. You have any thoughts about Palantir? This is one I don't want to short. If it gets cheap, I want to buy. But if it gets expensive, I don't want to short this thing. Some of my short calls I let expire in the money, so my position is much smaller. But anyways, what are your thoughts on Palantir? Narrative or price?
Why not both? P ratio is 389. The forward PE is 162. The price to earnings growth ratio, which many long-term fundamental investors say you don't buy when it's over 1, sitting at 14.13. price to sales ratio of 66, price to book ratio of 39, price to free cash flow of 178.63. The valuations look like they're off the charts, Victor, but maybe it's because this is actually a really positive growth story. EPS this year, growth of 52.46%. EPS growth for the next 5 years projected compound annual growth rate of about 27%. Sales for the past 5 years of up 32%. EPS quarter over quarter, 89% growth. And then you go through their fundamentals here, their quick ratio, 5.67, current ratio, 5.67, their long-term debt to equity ratio, 0.05. The company's balance sheet is in really good shape. And it has new technologies that are clearly in favor by the market right now, has a whole AI story attached to it. And moreover, it's very, very friendly with the PayPal mafia that seems to have a great deal of outsized influence in this new Trump White House. So it's meme stocky. I don't know if you trade it like you would trade another stock. If you're an investor who's, thinking about long-term, are you operating in there? Probably not. But if you're a trader short-term, there's enough there where, the valuations are out of whack, but like where we're going, we don't care about valuations right now. This is the bubble. We're like blowing the bubble right now. I really think so. I think we're blowing the bubble right now. The Trump coin stuff, to me is just like the worst thing that happened for the bull market and risk appetite, generally speaking. So, but like now we are finally in the final stages of the bubble blowing up. Is that S&P 7K or S&P 8K? I have no idea, but Palantir is going to be the meme stock that's going to go up way more than the market. When the market comes down, it's going to go down way more than the market. So if you think the market's going up, I have no reason to think that there's any good idea to be short Palantir.
So this, in your mind, this is the ARK funds of this
cycle,
of this round, of this cycle.
Unbelievable, by the way. Well, hats off. ARK, just tremendous performance here, Victor. ARKK. Great job the last few years. Did you see that she had to delete the tweet regarding harvesting tax losses for like the next decade?
I mean, I don't want to dance on a grave, but I just think.
Oh, I will. I don't like charlatans.
I don't. Here's the thing. I just think. I think it's really hard to have integrity in this business when you can convince yourself that you are right? Like you can convince yourself that you are selling deep value because the future is unknown.
She got all the future right, though. She chose all the wrong trades.
All the wrong trades.
And as an asset manager, you can't afford to be wrong in a bull market. The Nasdaq's less than 1% away from all-time highs. Her share prices are $100 from their peak.
Yeah, but it's up 50% in the last 2 months, something like that.
Oh, good. She lost 85% of value from high to low.
Look, I'm just saying, this is I think traders who manage their own capital have a lot easier time being accountable and humble for their humble in success and accountable when they've had failure. I think when you are trading and also trying to gather assets in the same time, it creates this very strange conflict of interest. How do you sell? If you're selling something that's down significantly, the sell side of you is selling deep value, but the trader side of you has to be accountable that you didn't take proper, you have zero risk management. And I don't think that part of the story, she didn't wear that part. And I think that that's unfortunate, And I think the not talking about liquidity and how that impacted her performance of just basically a basket of long beta and how turning money into funny money was going to create a risk appetite where everybody ran out on the risk curve. And that's why you're outperforming. It has nothing to do with some special formula you guys have. You just have the basket of assets that are the highest beta, and that's what's happening. And I just think that lack of humility probably cost them. But who knows? The market, it's as good as your last trade. So if they put together a little string, she'll be on CNN every other day again.
When she is, then we're really at the top.
Just like Tom Lee, there was a phase there where nobody wanted to hear from Tom Lee, during 2022, and now look at him.
Can't say that was me. After I worked with someone that he was very friendly with for a while, so I've always been a Tom believer.
Is that a thing? Is this? I like Tom Lee. I like Tom Lee. I think he's brilliant. I'm just saying that the zeitgeist of the public changes. I'm not speaking my own personal book.
If you're a pro-tech person and a pro-stocks person and you happen to be doing it during the era of, the past decade, you're probably right. And my parents and I talk about this all the time. Like, what do you attribute your success to?
Survivorship bias. That's all it is.
Well, the survivorship bias, but also like being in the right place and like the right time. My mom will often say like she attributes her success being a trust and estates attorney in the New York City metro area where all these hedge funds are popping up and all of a sudden all these people have newfound wealth after a 1990s economic boom. Well, they got to have someone to figure out what they're going to do with their money. And so like being that type of lawyer in this type of area, like right place, right time. And if she was a trust and estates attorney out in Rust Belt, Pennsylvania, all these years where the economy is shrinking and people are leaving, wouldn't have had that same kind of success with the family, even though her knowledge and intelligence and skill would have all been there. So, so much of it is luck and just where you end up. So got to be in the right place at the right time. And being in DocuSign is probably not the right place at the right time.
You got that, kids? All you got to do is work hard, study up, eat your vegetables, and pray to God that you're in the right place at the right time.
Pray to God that you're in the right place during the secular trend. But listen, the same thing happened out west for the past decade. If you were someone young who went into tech in San Francisco, money was falling out of the sky. And that's just, you didn't need to be smart. You didn't need to be successful. If you were in San Francisco post-global financial crisis, odds are that you did pretty well for yourself, and you're looking back at the last 15 years and go, wow, that was crazy that I went to that startup that had no funding and did XYZ, but you know what? It was bought by this and spun off into that, and now I'm 38 and I can retire or do angel investing or blah, blah, blah. And boy, did I get lucky. And that's real. You got lucky. But do something good with the money now and your life.
All right. We got a few minutes, so let's do this. I'm going to somehow try to you want to go there? You want to go there?
I read the entire case file last night, so
yeah, sure.
We can go there.
104,000 Bitcoin. One of the first, I think the first letter I saw was Rand Paul. Rand Paul earlier this week wrote a letter to President Trump, effectively calling for this. Was it? I think so. Maybe it's a different one. Maybe I'm confused. So let me not say this. The point is that President Trump, actually that was somebody else. President Trump pardoned Ross Ulbricht, the founder of Silk Road, right? Is that the right way to say it? The founder of Silk Road. What did you think about this pardon? What do you think it says? Coupled with, I'm going to try to couple this. Then poison pill it. What do you think it says coupled with the meme coin launch? What do you think this says about President Trump and what his legacy will be with regards to cryptocurrency?
He's clearly trying to be one of the guys, right? He's clearly trying to show that he gets crypto, he understands it. Some of the most respected crypto voices that I follow, I don't know them personally, I don't interact with them. They've just been right a lot of the time. And so I take their opinion seriously. They think XYZ is going to happen. It plays out that way. They clearly understand how this whole song and dance works. And they are apoplectic that right before Inauguration Day, Trump launches Trump coin. And then because of the resounding success of it, they launch a subsequent Melania coin, which then rugs the Trump coin. But it kind of validates the narrative for a certain group of people that this is all just a game of telling someone another story and passing the bag to them. I don't think that's good for the industry long term. It's now going to look like anything he does on the crypto front isn't that he's doing it to give back to his base. it's not because he believes that there's been overregulation, but it's purely something that may line his pockets. And that undercuts the legitimacy of the office and undercuts the legitimacy of the crypto sphere altogether. So if you thought that, Trump's going to come in and say, oh, Gary Gensler's gone, wild, wild west, everything's fine. What do you think is going to happen in 4 years if a Democrat's back in power? They're going to come down on the industry super duper hard, if only because you're going to have all these financial excesses that get out of control and scams and rugs and yada, yada, yada that go just basically are happening unbounded for years. So I saw a really fascinating tweet. I think it had like 13 or 14,000 likes yesterday. It's like, long-term fighting another Biden-Kamala administration for the next 4 years may have been better for crypto long-term than having the incoming president make his own meme coin on pump.fun right before he's inaugurated to circumvent the emoluments clause. Now, with respect to crypto itself and the Ross Ulbricht case, this has been a thing for the crypto community for a number of years. I think this is a really complicated case that a number of people who have been commenting on it and saying free Ross or don't free Ross, they really hadn't looked into some of the specifics, which is why I spent about an hour last night reading through the entire case file, in part because I was arguing with Ilya and Westwater about it, so I needed to make sure I had my facts straight. But there's clearly a bunch of things that this guy did that are wrong, illegal, bad.
Which side of the fence was Ilya on? Just I'm curious.
Well, see, I think that he did bad things that are illegal against the law. Whether or not the government got that evidence correctly because of the IP pen trap raises some questions. You have to then bring up the fruit of the poisonous tree doctrine, because if that evidence was obtained illegally or unconstitutionally, then any other evidence found from crimes committed relating from that, should be thrown away as well, which is true, but also not true, because if I'm committing a crime and I get a stop for that crime and they find that I've been doing all these other bad things too, I can be charged independently of them. I point out that the sentencing guidelines are for cases like this 20 to 30 years, maybe 40 years on the high end. So to receive 2 life sentences plus an additional 40 seem punitive. I also understand that there are issues in the case where 2 of the arresting officers were tried for tampering with evidence and stealing Bitcoin from Silk Road and Silk Road employees themselves. That said, though, like the alleged murder charges that were never proved in court, it's interesting that they were never proved in court because
murder for hire,
because the government had him like dead to rights on it. They have the text messages and voice memos between him and this user called Red and White. He wanted to get this guy nicknamed Friendly Chemist knocked off. And like this guy was just taking money from him and being like, yep, here's the body. And the FBI found no proof of, Friendly Chemist or being killed or Red and White actually doing anything. And so like the idea there is like, I think that these guys were in cahoots to scam him out of the money, right? And they kind of ran off with it. But just because you solicit someone for murder and don't ultimately commit the murder doesn't mean you're not guilty for attempted murder or solicitation murder. Those are still real crimes. The government chose not to charge him with them because they felt they had enough otherwise. But I do understand the frustration that a lot of people have when they say, well, then why did they bring it up in sentencing? You allege these things during sentencing, and then the judge uses those things as a basis for the sentencing, but you never prove them in court. That's frustrating, but that's also how the law works. It may not be a law system that we like, but I can say like, hey, I know that you've done XYZ things bad. I don't really need this to put it over the top. I don't know if a jury's going to buy it beyond a reasonable doubt, but we have the proof. We have it in writing. We have it in the voice memo. So we're going to throw it out there like this guy's a risk. I thought it was punitive. The sentence probably should have been reduced. Should he still be in jail? Perhaps. I think so. But this is also like, why is Trump doing all these blanket pardons for all these people? He's simply just checking the boxes of all the various constituencies that got him into power to pat them on the back. Like, why are we pardoning people who were violently rioting on January 6th, attacking police officers? J.D. Vance last week said that there was a line drawn. The people have been held for things like entering the building illegally and they've been rotting in prison for years. We're going to get them out. But the people who assaulted police officers, we back the blue, and yet those people are out too. So I'm not sure what the strategy is here. It seems like it's all part of the early days of just dump everything out right away, kind of like a Friday night press release from a company that wants to get something done before the weekend, but after markets are closed. it kind of feels like he's just doing everything right now, as unsavory as it may be. But again, I'm not a congressman from or senator from Kentucky, so maybe there's some information that Rand Paul is aware of that isn't in this. People want to read about the case. Thomson Reuters runs a website called casetext.com where you can look this up. It's United States v. Ulbricht 10, and you can read through it yourself. It's a very, very interesting case. There's podcasts on it, but I don't need someone else's telling me what to think about the words in the file. I can read through it all myself and come up to my own conclusions. But yeah, that's where I stand on it. Not a great dude, obviously. Let's be clear. Was it punitive? The punishment probably as well. But the world's not black and white, and the truth can exist somewhere in between government overreach and this guy being a murderer.
My only thought on this particular topic is, one, I think normally the pardon is used at the end of a presidency, and it still usually goes towards the base for political purposes, right? Usually, you're commuting somebody's sentence, or you're pardoning somebody that's got some life sentence, that's been sitting in jail that you feel has been reformed in some way. They've used up their appeal process, and the only opportunity for them to ever see the light of a functioning society and civil society again is through presidential pardon. That's their only means. And I'm a big fan of Abraham Lincoln, and I used to love to read about how he would stay up and read these letters, and contemplate sort of fair ways to resolve disputes or to issue pardons. And I think regardless of how you feel about the case or the evidence of this particular case, I feel like this is the way we should be using pardons. And so I don't want to go too crazy political here, but I do think, like, at some level, issuing blanket pardons for people and crimes they may or may not have committed, to things that haven't been investigated, to me this feels like a massive perverse use of the presidential pardon.
Well, the pardon itself is supposed to be like accepting guilt. I admit guilt.
Oh, it is. It is an
right?
admission of guilt. It is an admission of guilt.
So how do you get a preemptive pardon for something that you haven't admitted guilt to doing?
It's wild. To me, it's a complete perversion of justice. So at any level, I think there are always going to be people who disagree when the president issues a pardon, especially if somebody's been sitting in jail for a very long time. They're likely, especially for crimes with victims. There's going to be somebody out there that likely disagrees, or families of people who likely disagree with those decisions. But that's the president's discretion. In this case, like, whether I agree or disagree, I just feel like this is probably an appropriate use of the pardon. I don't love the direction we're going with these things. And I think President Biden was right in 2019, 2020, when he said about Trump, because there was whisperings that he might issue preemptive pardons, and Joe Biden said, and this is on CNN somewhere, that it would be bad precedent.
It was.
I think he was right. I think he was right then. Mm-hmm. And it's unfortunate that we've sort of crossed that barrier and we've set this new precedent. I think that's unfortunate.
Look, some of the blanket pardons are done for really, really good reasons. I know that others have said, "Oh, how come Biden pardoned so many more people than others?" Like, he gave blanket pardons.
I don't care about that.
Well, but like,
I don't care about that.
No, but I think it's good for the audience to know this, because I feel like part of the audience doesn't get this information all the time. But like, there's so many people who are on this list. I don't have the exact number in front of me, but like, they served in the military, and then they did something later in life where they committed a crime and they end up in jail. And so now they pass. And because they're a felon, they don't have access to things like pensions for their families. Their families lose their military pension because someone committed a crime and now guess what? That's it. It's gone. So when you're pardoning people that have already died, so their families can get some restoration of dignity so that they can get the pensions and then the access to the college grants because now they're officially recognized members of the family of a service member, that's a really good thing. I'm for that, whoever's president, right? But like preemptively pardoning people for crimes that they haven't admitted to over a very specific window of time.
It's wild.
Are you?
It's so wild.
My daughter's in earshot because she's in the house. Are you kidding me?
I know, bro.
What an egregious, gross thing to do. I'm not glad Trump's president, but I can't say that I'm not unhappy that Joe Biden isn't. And
that's so gross,
like screw you, man.
And by the way, kudos to you. We don't always see the world through the same lens politically. We're not that far apart, but we don't always see have the same view. But I think it's always. I think you can call me out on things that happen, and I think I'm not one of these people that are going to plant a flag and defend the home team. I'll say you're 100% right. It's insane, and I'll call out crazy stuff. I think you do the same thing. And that's why I appreciate you, because I feel like you have, when in these conversations, whether we're talking about price, geopolitics, politics, I think you approach all these conversations with an aspect of intellectual honesty, and that's refreshing in a world of hyper-partisanship. Chris Vecchio, I know I've kept you on a little bit longer than expected, given the fact that, I find your conversation riveting. If people are the same, and they most likely are, tell them where they can get more Chris Vecchio.
What website do I usually ask for them to follow me on?
I think it's Blue Sky lately, or Red Note.
Oh, you must be really upset with Elon. You're not even calling it Twitter.
I don't like him, dude. He's in. I can't stand him, man. I think. I don't know. Are we allowed to talk about this?
P.T. Barnum?
Dude, I don't know. He's a
showman, man.
He's a game theorist. I could do a whole another 30 minutes on that stupid gesture. What an idiot. What an idiot.
We'll always have the Doge Commission. Follow me on Twitter at CVecchioFX, here on Tasty Live Monday through Friday, Futures Power Hour, 1 p.m. Eastern. Overtime Monday through Thursday, 4 p.m. Eastern, right after last call. You can catch me on Tuesday mornings with Tom and Tony for Let Me Explain, or Wednesdays here with Victor on The Price of Truth.
Oh, man. All right. Take it easy, Chris Vecchio. Appreciate it. Ladies and gentlemen, there you have it, Chris Vecchio. I'm going to get out of here as well. Nico. What's up, everybody? But do me a favor, before you guys get out of here, hit the like button, subscribe to the channel if you have not already. And I will see you back here tomorrow. It's going to be a solo show tomorrow. We're going to do a lot more slides tomorrow. I've been prepping something for you. I'm coming into 2025 hot. I hope you're ready. A lot of fun with Chris today. A ton of fun with Ilya. Follow them both on Twitter. maybe if they're on Blue Sky, go over there. I'm just kidding. I'll see you back here tomorrow. Same time, same place, same great network. Only on Tasty Live. Peace.